Hey, hello everyone. Welcome back to the Black Brain Trust. This is Economics, episode 148, 140, I'm sorry. Um, Tonight I'll be hosting by myself. And there's a document in the description beneath the video. And please hit the like button as you come in, and we will get started. And just as an FYI, we are not certified financial planners. If you want a certified financial planner, please go to cfp.net. We do not give financial advice here. I'll give another 30 seconds to people to show up. All right, so we'll get started. First, first article is from CNBC.com. Apple should buy Netflix, but it would likely cost at least $189 billion, JP Morgan says. Apple has a power of nearly 250 and one of more could use acquiring Netflix to boost Apple's position as a video content creator. Quote, we think Netflix is the best strategic fit on the leading position in engagement level as well as original content, differentiating itself from pure aggressors of content, or pure aggregators of content. Sorry. JP Morgan analyst Samik Chatterjee said on Monday, quote, we believe there is value to acquiring the most successful player in this place, which is hard to replicate with a smaller player in this market. Chatterjee notes that the purchase would likely command a sizable premium. If that premium was 20%, it would likely cost Apple $189 billion, the analyst speculates. Netflix has a current market value of $148 billion and $7 billion in net debt. The note from Chatterjee outlines three industries the firm thinks would be a good fit for Apple to make strategic acquisitions, and names three companies Apple should buy: Netflix, Activision Blizzard, and Sonos. This is speculation from Chatterjee, but comes as Apple's long run of growth from the iPhone begins to dwindle. Chatterjee even notes specifically that combination of Apple Netflix is unlikely. Quote, quote, we believe Apple can drive synergies between its leading position in smartphones and the rapid transition of video consumption to mobile to drive stronger services growth, Chatterjee said. Quote, we find Netflix as the best strategic fit, although combination is less likely as Netflix is to be a seller for modest premium. Like to me is and I think we've discussed this on this hangout before, that Apple is um Apple is in a slow spiral, and yeah, they have $250 billion to burn, but at the same time, what are you going to do with all that money? You're going to have to, for one, they have to strategically look at their portfolio and say, where are we burning cash? And then number two, they have to figure out how to consolidate the cash that they're burning. And then number three, they also have to look at what is the next acquisition that is apropos for for their portfolio. Hey, what's going on, Dollar?
What's happening, fam? What's happening?
I'm good. You have anything you want to add to that?
I came in the middle of the article, but I'm just judging from the headline. They got to do something, and Netflix, I think, is a like I said, companies with money, they buy in at the top or near the top, and Netflix is the hottest thing going, and owning Netflix would drive a whole lot of traffic to that Apple store or iTunes.
Mm-hmm.
I think you would see a lot of I mean, maybe they would add a tiered service that if you pay this amount with say your iTunes, you would also get Netflix.
Mm-hmm.
And I can't that's automatic would drive all those customers to that Apple space where they would possibly buy other things.
Mm-hmm.
So I mean, do you think it would be a good idea?
I don't think they can afford it.
Gotcha.
I don't think they can afford it. That would swallow a lot of their cash flow. That would leave them with very little cash to maneuver with, unless they start reconsolidating a lot of their debts that they had. I mean, they must have sank a lot of money into that autonomous vehicle segment that they were working on. So I can't imagine how much money they probably poured at that. But Netflix, they already have Beats, and when they bought Beats, they also got the Beats music package, the content catalog. So they have that from an audio standpoint, but from a video standpoint, they would need something comparable to Netflix that they can push for themselves, right? This might be a perfect time for Apple to actually start sponsoring a lot of the grassroots garage band type of movie content, and then add that to their portfolio for proprietary use, right? Because that's what Amazon does with Prime, and that's what Netflix does now for themselves. I don't know if they can afford to just go ahead and swallow Netflix whole without chewing.
Now, if they could afford it, you like the concept of it, the idea?
Yeah. Yeah, that's actually a good idea. They would have to figure out a way to get off of Amazon though, because they use Amazon's web services. So that would cost them a lot of money too to actually move them off of that whole infrastructure. That would cost them probably $1 billion just off of that.
Oh, so it would cost them. So you saying Netflix is on Amazon's web structure right now, and and to bring them over to the iTunes store would be expensive.
That transition could be expensive. Netflix, you may not notice, and people listening to this may not notice, they are strategic in-house development of everything that they use is customized. So it's not so much as proprietary, but it's homebrewed. So all of the infrastructure that they ride upon outside of AWS is actually built in house. Very smart people who run Netflix. It's very efficient. I think they probably spend maybe 1 to 5% of their revenue on infrastructure development.
So let me ask you another question. Again, I didn't really hear the article. Is Netflix interested in selling, or are we talking about more or less a hostile takeover of
It's a
Netflix?
hostile.
Gotcha.
It would actually it would make Apple look better, but it wouldn't do much for Netflix because Netflix already has its customers.
Right. Yeah, but Apple has got to do something, and a big move like that is kind of what I have in mind, that the type of thing that Apple has to do.
Mm-hmm.
They got all this money. I mean, what else you going to do with it?
Mm-hmm.
If that share, I mean, Netflix is going to see the same implosion, of its share price, in the stocks, just like everything else, discretionary market. But it's going. I think Netflix will survive it.
Hmm.
It will survive it, and there's a certain amount of people that will be able to hold on to those that $10 subscription fee or whatever. It's enough people that can afford to hold on to that, whenever we really get rolling again in this downturn in the stock market, and when we hit that bottom, Netflix is going to be one of those companies that's likely to come up a winner again. It's going to be a lot of great companies, and if Apple can position themselves to own
Hmm.
a key, a jewel like Netflix, I mean, man, that's winning.
There's so many ways that Netflix can go to survive. My understanding is that there's been rumors about a Netflix movie theaters popping up around the country. So, as kind of like a beta test or a trial to see if they can push their own content into movie theaters. So,
Wow.
right, because that's a social gathering point for people.
Yes. Yes. Wow. So can you see Apple taking over Netflix, and then at some point in the future pursuing that same goal? So I'm going way fast forward. I'm going past the downturn in the stock market, and some maybe 2-3 years down the road from here, when we're in recovery mode and Apple is now opening up the stores again, and then they get a footprint in the movie theater space. Man, that would be a hit too.
Yeah, absolutely, absolutely. They can start challenging Disney and the rest of them. So,
Man, you're right, but they got to do something.
yeah,
They
they
got to make
do.
a move.
They do, and I think what's going to happen, at least for Apple, is that they're gonna start consolidating a lot of their net losses. Those stores cost a lot of money.
Right.
We've covered just one store. One store is $2.8 million a year just to run that store. I can't see the foot traffic being worth it.
Right. Not to mention, and just to support what you're saying, because Apple has it survived for forever without a retail presence. Okay, so the whole culture of Apple has been online and direct selling. They were, initially people bought Macs in a catalog.
Hmm.
Okay,
What is the
it
what is
was
the catalog? Macworld.
Macworld, the magazine, but the
Yeah,
catalog was like PC Mall, Mac Mall. They
yeah,
had a
Mac.
Mac, right? And so it survived. It built itself into what it is without the stores. The stores came along after Apple was already successful. So yeah, they could go back to. They could survive without the stores right now, and then reopen them at a later date.
Or they could sell it back to the landlord and do something, finagle a different deal. Because I can't see owning property being valuable to them. Because Apple's not in the real estate market, so I can't see how
Right.
that can be valuable to them. That's
Right.
got to be
That's what I'm saying. They
serious
could
net
they could back out of it now,
loss.
and then come back in at a better time when real estate will be on and say a uptrend, appreciating. But
Hmm.
yeah, but like you said, and then especially like in the other conversations you've had where you explain how malls are closing all over the place. So why does Apple need to feel or be territorial about retail space in a mall when you can have your pick?
Hmm.
There's no shortage of mall spaces. Vacancies are abundant in malls.
Hmm.
So why does Apple need to hold on to that real estate? They can walk away from it and come back and get it later.
Right, right. I would remember. I think you might have sent this article out that early this week that the retail chief actually stepped down.
Yes, yes.
That's just a sign of things to come.
Look, I think the article said something like three. They had, I forgot the time period, was it like 5 or 7 years or something like that? Like three different retail chiefs.
Hmm.
The turnover has been pretty great. at that position, you know.
Yeah.
So
If
that
you
that
find that
tells you
article
how
and
they
you
feel about email. I'm sorry, you want me to find that article?
no, I said if you could find it, it'd be great for us to kind of read out because it ties in with all of this right here because Apple is scrambling right now. We've covered the numbers before, but their PC sales are down. No one's really buying MacBooks like that. It's just not. People just use their phones. If they want to. I mean, you have also Apple Print. You can print from your phone or from your iPad. You don't really need your phone. I mean, need a desktop for that matter. I mean, who's really buying a Mac, a Power Mac at this point? The Xeons, the Intel Xeons inside those Macs. People aren't really buying those things like that anymore. It's not worth it.
Right.
They'll go to
Let
Dell.
me give you this right here and bring it up.
Hmm.
There it is in the chat here, our chat.
Hmm.
You can
Yeah, I'm gonna
share
share
with
my screen.
everybody.
Yep. Hmm. All right, this one is from Yahoo Finance. Apple names third retail chief in 7 years, post iPhone error. Apple Incorporated named its third retail chief in 7 years, seeking to shake up store operations while casting about for the next big hit as iPhone era wanes. On Tuesday, Apple said company veteran Deidre O'Brien will replace Angela Arendts, who served in the role for about 5 years. O'Brien is the first insider tapped to run the Apple division since Ron Johnson opened the first Apple store in 2001 and left a decade later. The departure of Arendts, Apple's top female executive, was a surprise, but it also marks a turning point for the company in its approach to retail. Sales of the iPhone, Apple's biggest product line, peaked last year, putting more pressure on Cook to find new revenue streams while experimenting with promotional pricing tactics that Arendts eschewed. So that's actually a key bullet. The putting more pressure on Cook to find new revenue streams while experimenting with promotional pricing tactics. So Apple's they hit redline from a mechanical standpoint, from a motoring standpoint. They've hit redline at this point. They're out of gears.
Nowhere to go but down.
Hmm.
Not yeah. What do you do?
Yeah.
What do you do? Especially when you bring it down to the personal level. If you're the CEO and people are, pressuring you for more growth, more diversifying they're pressuring you to diversify the revenue stream. Um, you're also fighting for your personal survival. You know, you have to come up with an answer. You know,
Hmm.
against fighting against the tide of a slowing global economy. Because their sales in China are way down too. So he's got a tough sell. He's got to come up with the vision and sell it to the board, and he has to let them know that this is a long range plan that may not bear immediate fruit. He's got to do one heck of a sales job. He's got to lower the expectations within I guess the executive ranks and the board ranks of the company. He's got because they're not going to be able to continue to grow as they have in the past.
Hmm.
So
And there's an interesting quote right here. Those tactics may have not gelled with the retail environment Arendts tried to create. In an interview with Vogue magazine last week, she said, "quote The tragedy in retail is that it has become about numbers." She also said miss some. She also says she missed some things about the fashion industry. So what we're seeing right here is that the numbers aren't adding up for Apple. It's just not adding up. It's they're in a very very slow spiral. It's a controlled spiral, but it's nonetheless a spiral. And I don't know what the impact is going to look like. I mean, I've never fallen from a third story window or a fourth story window where I had to predict how bad the impact is going to be. This is probably like the Titanic. The iceberg is there, but no one's actually trying to counter maneuver.
Yeah, and this is Apple we're talking about now. Imagine for a moment other companies that don't have the brand power of Apple. Now, if Apple had the largest market cap in America of all stocks in America.
Mm-hmm.
So if the seas are rough for Apple, what does that say about all the other product manufacturers in the mall?
Mm-hmm.
So it's worse for them. In the near future, we're going to be talking, about people, all luxury brands. So I'm going to put Apple in the category of a luxury brand because nobody needs a $1,300 cell phone. Okay, really, nobody really needed a $3,000 laptop.
Mm-hmm.
Okay, so it's a luxury brand at a time and a point in the economy where fewer people can afford it. So all of your luxury brands, all of your basically all of the stuff that the women like to wear, that they spend big money on, you name it, your the all of the, from the jeans to the bags, the bag manufacturers and all of that, those are the stocks they're going to take it bad. They all going to get slashed.
And they also had Activision Blizzard, which is a gaming company, gaming content company, and
Apple
they
owned them.
no as a possible for Apple of adding to their portfolio because
Gotcha.
gaming is a multi-billion-dollar industry. And then Sonos. Sonos has the Apple um, culture behind it. This sort of device that looks like it could have been made by Apple. If I remember correctly, the people who run Sonos, I think some of them came from Apple.
Well, I'm familiar with Sonos. I don't own it, but when it's got the ergonomics of an Apple product. You're right. It definitely looks like an I something. you
Yeah.
know, I I I I speak, or I speaker. I'm trying to figure out a name for this product with an I in front of it that Apple could But yeah, that would fit. It would fit. It's a slick looking product.
But this isn't typical of Apple though. During the Jobs era, this would have never happened. Apple wouldn't and bought something. They wouldn't have made their own product, made their own competitive product, um, and challenged it. From a marketplace standpoint, the idea, well, if we can't beat them, join them. The idea of Apple saying something like that, they're the innovators of the industry. How could they say something like that?
Yeah, I think this is where you and I disagree. When a company, when you are the underdog taking on the world, that's a different mindset, But once you conquer the world, and when David becomes Goliath, your strategy and view of everything is different. And Goliath, he doesn't innovate; he buys. He just buys stuff. It's quicker to buy talent than to create new things, or grow your own.
Mm-hmm.
And so that's the phase Apple is in. That's why the Netflix deal makes sense to me. I mean, you could ask, well, why haven't they created their own Netflix in all these years? What were they doing? It's
There
like
are
they opened the daggone iTunes store, and then what? Like the next step is to own a media property, and
but,
then
but
they never got around to it.
well, you needed iTunes to actually interface with the iPod.
Yeah, but the iTunes that's the distribution. But at some point, you would think that Apple would grow to the next level and say, okay, we want to own some of this content, as well as distributing up the content of others. But there's some cherry in here we should own. You know, some series. I mean, Apple could have had just like Netflix has Netflix exclusives. You
Mhm.
know, series that only exist on Netflix, and everybody's heard of some of these series, and maybe if we may not have even ever seen them, but they, you know, they people talk about them so much. Why couldn't Apple have create? You know, why didn't Apple create a series that everybody was going to the iTunes store and, you know, paying per episode or paying for a season or something? That's a big failure.
Yeah, there was a big content gap in their portfolio.
Right. So Netflix, so what do? Okay, we'll go buy it.
I mean, at this point, the only thing they can really focus on from a device standpoint is the watch. I mean, there's only so many ways you can finagle the iPhone. I mean, you can make it as thin as a piece of a cracker. You know, that might be like a iPhone Air, right? You know, really thin, really sleek. That's the extent that they can go with the iPhone at this point, and you would have to start focusing on the Apple Watch. Um, Telephony capabilities, casting capabilities. They would have to focus on that because there's this is the last go around for the iPhone. You know, you can make it bigger if you want to, but you're only doing that because Samsung came out with the Galaxy Note and you didn't have a response to that, a product in response to that. So you're trying to keep up with the Koreans, and at the same time, the Koreans are kind of this. They already have their audience for the Galaxy Note. So the people who bought the iPhone Max or XR, whatever you want to call it, the big iPhone, the biggest one, the flagship,
The Plus.
right? Yeah, it's a plus, right? So they, that's a new, that's a small audience for Apple. When you buy an iPhone, right? The 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 point of the phone is supposed to be it's supposed to fit in your hand like a glove. And your thumb should reach the top of the screen and so on and so forth. You're not supposed to use two hands with an iPhone. Um, the reason why you only have one button on the phone is because that's the way it was meant to be, right? You're supposed to only use one button, whereas on the Android phones you have three buttons, three capacitive buttons: the home button, the backspace button, and then there's another button, a context button. That's always been the fundamental way of how that differentiates between the iPhone and an Android device. Apple's trying to keep up with, you know, with a product that is completely doesn't align with the way of thinking. So whoever came up with that idea to come up with a bigger iPhone to keep up with the Android market, you know, they kind of shot themselves in the foot.
Right. And it's like it was either what, a bigger iPhone or a smaller iPad, and it seems like they basically tried to do both, right?
Right, and it didn't work out too well because it doesn't do what an iPad can do, and it's not really good as a phone. It's too big.
Right.
You try to cradle that thing in between your shoulder and your ears, it just doesn't make a whole lot of sense.
Yeah, I think the market is already kind of weighed in on what size they want for the phone, what size we want for iPads, what size we want for laptops. You know, remember years back we had those 17-inch laptops? Well,
Hmm.
the market had basically decided that the 15-inch laptop, that's it, you know, and the iPad somewhere around 12 to 15, somewhere in there.
Hmm.
That's it. So they can't. Apple can't continue to get increased revenue just by giving us fruity colors in different sizes.
Hmm.
You know, they have to really offer a useful advantage or difference. You know, to with, you know, within a certain product line.
Hmm.
You know, I mean, that was huge when Apple did that with the iPhones, came out with the lifesaver colors.
Right.
I think it was the iPod did it first, right?
Yeah, it was the iPod.
Right.
Right. All right.
That
Let me.
gimmick is done.
Yeah, they're running out. They're running out of gimmicks at this point.
Right.
All right. This next article is from TechSpot.com. This was sent by our good brother, Man of Tomorrow. Analysts say Nvidia lied about its cryptocurrency earnings to avoid stock crash. Big quote. We think Nvidia generated $95 billion in total revenue related to crypto blockchain, said Royal Bank of Canada capital market analyst Mitch Steves. Quote, the, this compares to the company's statement that it generated around $602 million over the same period. NVIDIA has been hit hard by a cryptocurrency crash, possibly worse than any other company. In November, their stock dropped 19%. In December, it plummeted 50%, all because of excess inventory of the Pascal cards they produce to satisfy miners. Presently, their stock is about 50% down than it was only a few months ago, when it peaked at $292.76 during the September 2018. So while the stock is holding on and bounced back a bit during January, the steep falls are a strong incentive for NVIDIA to mask large fluctuations in revenue. According to Steve's, measuring the hash rate and calculating the volume of Ethereum and other cryptocurrencies mined from 2017 to July 2018 reveals that roughly $2.75 billion should have been generated in sales. NVIDIA should have captured about three-quarters of that, with AMD getting the rest. AMD's earnings forecast released last Tuesday backs up this idea. They expect revenue of $1.25 billion, 24% lower than this time last year. NVIDIA's forecast was $2.7 billion, but they recently dropped it to $2.2 billion, prompting their most recent stock price troubles. Admittedly, it would be surprising to see NVIDIA miss revenue expectations for a single quarter by $500 million because of the crypto hangover. When crypto sales only generated $600 million to begin with. Yeah, this is really interesting because as crypto slow down, as the market slows down, they're losing revenue. I like Nvidia as a stock, but I don't like the fact that this is happening to them. I would hate to be in a hodl position for them.
Right. Well, I'm intrigued by all you stock traders out there. Write down in Nvidia, create a folder, put this article in it, because this is an interesting play when the dust settles. I'm of the opinion that the market has got a long way to fall, and we see what's going on with cryptocurrencies, but that will end. And NVIDIA seems like an excellent play because of those, the Pascal cards are tied to the mining. So you can take advantage of the growth of cryptocurrency by buying this. Okay, are they are a semiconductor company, right?
They are a semiconductor company involved in graphics development.
Okay, so their niche is graphics. Mm-hmm. And they like video cards and the other types of accelerators, right?
Yes, they focus. They have a new chip called for artificial intelligence that's supposed to be put inside vehicles that allow autonomous vehicles to actually operate efficiently.
And they're also in the gaming world too, right?
They are a largest competitor in the gaming industry.
So with this one company, I can get involved in autonomous driving, gaming, and cryptocurrency. Mm-hmm. And it's a strong name. So yeah, this might not be the right time, but I like where they are positioned in all of the growth areas of technology and even in finance with regards to a cryptocurrency. So no, it doesn't look like this is the right time to buy them. But NVIDIA is one of those companies that along with AMD, quality companies like that, you put them on your short list. I don't mean short the stocks, but on your list of at the top of your list of stocks to consider buying at the end of I'm talking about maybe 2 or 3 years down the road. They're going to be one of these companies that's going to survive because they look at what I mean. NVIDIA has been in that video card acceleration market forever, forever. So good stuff.
Yeah. we covered an article before where AMD scored a big major deal with Apple to be integrated into the MacBooks. So and out with Nvidia and in with AMD. So that was recently, I think last month.
I like both.
Yeah, I do like both. I do. But I see them moving in two different directions as companies though, two
Right.
semiconductor companies.
So I mean, when you say, you mean that specializing separately or apart from each other, meaning does it? Let me ask it this way: do you see them trending apart in terms of like trying not to compete head to head?
They're moving in two different directions from a portfolio perspective. So AMD is really focusing big on the cloud now and supercomputing, whereas Nvidia is moving more towards artificial intelligence, more towards um, their number one bread and butter is gaming, but gaming is starting to wane. So you're starting to see them divest their portfolio into artificial intelligence and accelerated chips and things of that nature. Whereas AMD is moving way into the cloud now. So now companies are seeing that because they have main processors and then graphics, whereas NVIDIA only focuses on graphics acceleration.
Wow. Okay.
Right. So AMD actually competes with Intel in the cloud sector, but they also have their graphics cards that could be leveraged as extra compute power in the cloud space, whereas NVIDIA only focuses on graphics and they can only go so far in the cloud space, so they have to focus on other vertical markets such as artificial intelligence chips. So that's why I said they're moving in two different directions um, for their own safety.
Well, those are excellent fundamental reasons why those companies will be put on my watch list. But my technical insight says this is not the right time. Those are the right stocks, but it's the wrong time.
Hmm.
Excellent, excellent.
Hmm.
But that's how you have to think. You know, when you really get deep into this trading, you look for these moments when the economy is punishing quality companies. And you let the market do its thing and let those companies take that beating, and you ignore the negative headlines, and when the charts tell you that now it's the time, you jump in. But the headlines are going to be nasty, but you just trust what you're seeing on the charts, and you have the fundamental arguments that Mike just provided to back you up, and you just have to have the courage, guided by your insight on chart reading, to just take a plunge.
I've always considered myself to be a fundamental technical analysis.
Fundamentally, yeah.
Yeah, fundamentally speaking.
Right.
Yeah. This next one is from EthereumWorldNews.com. Iran launches gold-backed stablecoin amidst U.S. sanctions. Iran is determined to find a way to prosper amid the unilateral sanctions imposed by the U.S. government and the political team of Hassan Rouhani, president of the Persian country, is relying on the use of blockchain technologies as a way to counter U.S. influence in the world of international finance. On January 30th, the Iranian government unveiled a gold-backed cryptocurrency. The sovereign stablecoin is called Payman, uh, Covenant in Persian, and was designed and developed by Kuknos, an Iranian company focused on tokenization of different types of assets. To ensure the proper functioning of the stablecoin as a currency, the Iranian government and Kuknos made alliances with four banks: Mali, Iran, Mali, Iran, Pasargad, and Persian Bank. Likewise, Iran Farah Bourse, an OTC trading desk, is expected to be incorporated into the system, thus extending the trading capabilities or capacities of this cryptocurrency. Iran's decision comes a few days after the country announced the development of the first draft of regulations on the use, distribution, and exchange of cryptocurrencies and blockchain technologies. Also, the first stablecoin is like the antechamber to a ambitious project in which Iran hopes to develop and implement the free circulation of fiat-backed crypto, which could be used by ordinary citizens and banks in
You
financial
borging, Mike. I'm sorry, Mike. Pick up. You were borging. Fell off free circulation of fiat-backed crypto.
Oh, okay. Also, this first stablecoin is like the interchange to a ambitious project in which Iran hopes to develop and implement the free circulation of a fiat-backed crypto, which could be used by ordinary citizens and banks in financial operations. The sovereign cryptocurrency project gained strength after the United States unilaterally decided to maintain economic sanctions against the country, pressuring the SWIFT system to remove Iranian banks from its platform. The decision had a profound effect on Iranians' quality of life by restricting their daily banking operations. However, it is expected that in the coming days, the Iranian media will comment on the impact this measure brought to the Iranian population. As reported, our partner site, Crypto Crimson, Iran is already in talks with the main European economies seeking to support so that they can use sovereign cryptocurrencies as an alternative to the SWIFT system to process international transactions with this country. Representatives from Switzerland, South Africa, France, England, Russia, Austria, Germany, and Bosnia have visited Iran to hold related talks about this issue. So you even got South Africa in the mix. That's interesting. Iran going with a gold-backed stablecoin is a very, very strategic move and almost downright hostile in the face of sanctions by the United States. Because now the sanctions don't mean anything. Yeah, you can put sanctions on medicine and things like that, but if this is established, similar to their nuclear program, with the same efficiency, then you can expect that this has already been in the works for quite some time. It didn't happen, a few weeks ago or a few days ago. This has been going on probably the last maybe year and a half, probably since Trump has taken office, and they've probably made all the necessary steps possible to establish this platform to make sure that it is efficient. The Iranians are actually very good at information technology and digital transformation, quiet is kept. So this happening actually is a good thing. I've heard about this back 2018, but I didn't realize that they were this far ahead. So
when you say it's a good thing, you say it's mean from Iran's perspective, right?
Yeah, if you're the Iranian government, yeah, this is a good thing. If you're a major corporation like Huawei, then this is a good thing because now you can do business.
Okay. This is interesting. This is a geopolitical show topic.
it is and then it isn't. It is and then it isn't. Because
I'm struggling with the politics of. Okay, you have to have someone to accept that currency, to trade with you, and now you're making enemies with the lion. You're poking the bear, the United States. That's. I mean, so it's really more political than anything else. Will their coin be supported?
Well, yeah. If going back over the article, they say Switzerland, South Africa, Austria, and the rest of these countries.
They said they're talking. They're gonna go talk, right?
Yeah, but you don't show up. You don't show up just to talk. You're showing up to figure out mechanisms in place to see if the mechanisms that are in place are compliant with what needs to be done. So, if that's the case, and they could sidestep the SWIFT system, then that means that the SWIFT system could be obsolete within a year.
Yeah, and I'm sure part of those talks is I'm sure those countries are weighing the political fallout, the consequences of stepping into the middle of a conflict between or America's desire to be able to exercise some level of punishment or
Well, it
control.
really, all those countries had already, at least not those countries listed, but the countries that were a part of the JCPOA, Russia, China, Iran, Germany, and France, and Britain, they were already on board. So it was only Trump that walked away from the deal, from the JCPOA. For those of you listening, the JCPOA is the Joint Comprehensive Plan of Action on the nuclear issue over in Iran. That was the deal that Obama worked out in 2015. Everybody agreed to it. They were already fine with it. It was only Trump, when he came into office, that he decided he was going to rip up the deal. But just because the United States pulls out doesn't mean that the rest of the European countries and Russia and China are going to have to pull out too. That that's almost irrelevant to them. So those other countries can actually do business with Iran if they wanted to, but they're treading lightly. Now, because of the mechanism to do business would be the SWIFT system.
So this is not just Iran turning their back on the SWIFT system in America. This would be the European world, most of the world also. So Iran is taking the lead, but apparently, but they have support.
No, Trump walked away from the deal, not Iran, not the rest of the countries. It was
No, I know, but in order, like you said earlier, previously, those other countries are meeting with Iran to pursue, explore how this would work. You know, if they could go forward with this gold back crypto.
right, because those
So
companies
that would be a slight, though not just that Iran is doing against the SWIFT system, which apparently the United States favors. That would also be those countries that you mentioned also turning their back on the SWIFT system as well,
not
or expressing eagerness to do it.
well, they own the SWIFT system anyways. I mean, the SWIFT system is nothing more than an instrument, for financial transactions, but they don't actually need the SWIFT system anymore if there's alternative systems in place. The only reason you use the SWIFT system because it's established. But if there's alternative means in place that can do it faster and more cost efficient, why not use it? But the
So
only
what do
reason
you think the Trump administration's response will be?
the Trump administration has said that they would sanction the private companies that try to do business with Iran. So that means you're going after people on the ground, and in Europe, like Peugeot and Renault and
Yeah.
and some of these telecoms that want to do business there. You're basically threatening them. You're putting a gun to their head.
Right. So it's like us against the world, and
Hmm.
it's like all of those countries. Presumably they're representing their businesses of those countries.
Hmm.
They're basically saying, giving Trump the finger.
They would have to, because if they've already established their buildings, they already put their computers in place and their network in place to actually do business from 2015. Yeah, that would make them pretty upset because you have to rip all those rip the guts systematically speaking out of Iran and go back and take your ball and go home. And that's not something that they're too keen in doing because Iran is actually a very emerging market. Quiet as kept, it's an emerging market. It has 80 billion people. I mean, 80 million people, and they're very intelligent population. And there's a lot of money that's there's billions of dollars that are floating around in Iran that could actually be utilized by buying European goods, and Europeans are seeing this as potential growth for themselves. Iran is seeing as potential opportunities to get back into the global markets, and you have somebody like the Tangerine Tyrant sitting in the house saying, "Well, I don't like what's going on, so I'm going to tear this piece of paper up." That doesn't work for them. That doesn't work for the Europeans. Europeans are not happy with it. Europeans are trying to figure out an alternative way of doing business in Iran. So a gold-backed cryptocurrency, especially gold-backed, that's really telling because it's one thing to try to make it oil-backed, but now you're talking about using gold, and gold is a very solid um, a very solid
Commodity.
yeah, very solid commodity right now. So
Hmm. We'll see.
hmm
Like I said, I'm sure you're going to be talking about this on the geopolitics show on from time to time on Wednesdays.
hmm
So I'll keep my ears open for y'all to do a deep dive on this over there.
yeah, especially looking at the price of gold. Gold hasn't dipped past 1100 in
Right.
quite some time. So
But you know, I'm pessimistic on it. We'll see.
all right, this one is from MarketWatch.com. Prominent Republican wants to take your student loan payments out of your paycheck. Get a good look at them. Borrowers could soon be required to pay back their federal student loans directly from their paychecks if one powerful Republican gets his way. Senator Lamar Alexander, a Republican from Tennessee and the chair of the Senate Committee on Health, Education, Labor, and Pensions, which oversees higher education, proposed automatically withholding a borrower's monthly student loan payment from their paycheck, similar to the system already used for federal payroll taxes. Alexander floated Alexander floated the idea in a speech outlining his priorities for reauthorizing the higher education account.
I'm sorry, Mike. Is he talking about lowering the tax basis? You know, that it would come out uh, pre-tax.
I don't think so. Let me finish reading this. The statute that governs colleges and financial aid. As a former governor of Tennessee, Secretary of Education, and president of the University of Tennessee, Alexander is a prominent voice on higher education issues. He plans to retire in 2020 and has signaled that he like Congress to reauthorize the HEA by the end of the year. In the speech, Alexander said his proposal would, quote, streamline the nine repayment plans currently available to federal student loan borrowers into a, quote, new option that guarantees that borrowers would never have to pay more than 10% of their income that is not needed for necessities. If a borrower, quote, if a borrower loses their job or does not make enough, they would not pay anything they would not pay anything, and it would not hurt their credit score. He continued. The monthly payment would be automatically withheld from a borrower's paycheck, just like federal taxes. It's hard to say how likely it is that Alexander's proposal will become reality. While there while there is bipartisan consensus on some of the challenges facing colleges and the student loan program, as experts are skeptical that the two sides could reach an agreement in such partisan environment. This is actually a very long article and very very interesting, but this is not a good thing.
So they clarify later in the article whether it's pre-tax or not? I didn't read it. I'm sorry.
No. It's not pre-tax. It's
Wow.
basically like child support.
So
You owe.
why would anybody volunteer for this? Are they talking about it being compulsory? Because
Compulsory.
why would anybody volunteer for this? Or are they talking about making it like a requirement?
If you owe, then they're gonna take it out of your paycheck. That's all. That's all they're saying.
Oh man.
Right now, it's optional if you pay it or not. So if you don't, I mean, if you don't pay, you end up in arrears. But
Okay.
now what he's proposing is, well, when you get your paycheck, is this going to come out of your paycheck just like child support does?
Wow. And you know they can really go after federal workers.
Right.
They really can do that.
Right.
Man.
This is a disaster, in my opinion. If you, there's nothing beneficial to paying off student loans in this country. It doesn't improve infrastructure. It doesn't reduce the econ. It doesn't reduce the national debt. It doesn't improve the economy. What's the value of it?
Well, the banks don't have to take this loss, right? or the government back though. Those are government backed loans, right?
Right.
So if you default on the loan, then the taxpayers end up paying it because the government has guaranteed the loan, right, to the bank.
Right.
So either all of the people end up paying everybody's student loan,
Hmm.
or the people who took out the loan pay for the loan.
Well, what I'm thinking here is that at least from a black person's perspective, if you're gonna guarantee loans, for BS degrees, I think we should start talking about reparations then.
I agree. That's the context. I mean, for us, that's the context
Hmm.
where this belongs for us. But it just as a general American issue. This is interesting because if with what we have a lot of people, you know how we feel in this country about taxes. You know how we feel in this country about welfare.
Right.
Okay, various people. And I'm going to be paying very close attention to the people that are against welfare, against raising taxes, who also think that the student loan debt should be waived. Because to me, that's contradictory. But I'm going to be watching you guys now. Y'all make these arguments across these different subjects. Dollar, we're going to be keeping score. I'm gonna
Oh,
come
really?
back at you. I'm gonna come back at you now. You're gonna have to be consistent on your values about this money and taxes.
No, but what's really happening is that the cost of education has gone up 2,000% since 1977. So the question is, why is it so expensive now when the curriculums have not really changed all that much?
The side you can look in the parking lot. Go look in the parking lot of universities and see what kind of cars the teachers are driving, the
Hmm.
professors. That'll probably give you your answer. Look at the homes they live in. So they're getting paid pretty well. The tenured professors getting paid pretty well. But by the same token, I hear your point because they're also exploiting the what do you call those adjunct professors?
Yes.
So they get exploited. But the tenured professors are getting they're being they getting off pretty good.
Hmm.
So I mean, it must be getting off really really well considering all the money that the universities made from these student loans.
Hmm.
Because tuition is ridiculous. If you, I mean, you want to see inflation, you look at how much tuition has raised over the last 30 years.
2,000%.
Yeah, it's crazy.
It doesn't make any sense. The brick and mortar aspect of it really there's no major improvements to the brick and mortar structure. So, and you can get a degree online now. So what's the real value of charging somebody that much money and then expecting and then not aspect of the lack of first time home buyers to student loan debt.
No,
You can't.
it's the big lie. Okay, again, I'm a little older. I'm 55. I remember when what we call online learning, they used to call distance education, and that's you kind of got materials in the mail, and you sent the information back in the mail. And when the internet really developed, and we start talking about online education, everybody knew that it would cost less, but it didn't. And so you're right. There's no justification, especially for with those online schools, why it costs so much. Why are people paying $10,000 and crazy amounts of money for online education?
Well, not even just online education, but what about these people who are spending who are $200,000 in student loan debt going to these Division 1, Division 2
Right.
schools?
Well, no, in the plan initially, or the idea that they sold us on, is that good old competition in capitalism. With these online models would come forward, and the online schools would be so inexpensive because they don't have any overhead. That would the competition would cause the traditional brick and mortar universities to bring down their prices. That didn't happen.
Hmm.
Everything went up. It stayed up.
And then you had this emergence of these for-profit schools. You know, your DeVries and your
Right.
University of Phoenix, and that didn't help anything. That was like a cascade effect, a powder keg, if you will. That
Yeah,
caused all
and
these
and
problems.
the universities, government came forward. They backed the loans. So the government is the people. The electorate put the public on the hook to buy back these loans, and the universities, they raked in the guaranteed money, and of course, like you just said, that attracted businesses to come forward and say, hey, we want to get in on some of this action. And nobody protected the people.
Right,
Nobody looked out for the people.
right. And you have Nate in the chat who seems to agree with you. Says at Dollar Will, I agree. Why borrow if you have no intentions on paying back? Because what you're telling people to do, and I'm not attacking you, Nate. I'm just kind of emphasizing my emphasis behind this. What they've told all of these millennials to do and these zennials to do: go to school, get a degree, get a good job, and live happily ever after. What they didn't tell them was that there was this immense amount of debt that was going to be accrued from these student loans. Nobody ever told them that.
And what they didn't tell you is that they had made you believe that the salary of the one, that the jobs would be plentiful, and that the salary was going to be so high on the job that it would justify you going in debt. That didn't happen.
Hmm.
Didn't happen.
Hmm. And now you're asking people who can't find a job, or some of these. I saw an article about black women with a master's degree working at Walmart or something like that as a manager or something like that, a closing manager or something like that. Just ridiculous. Like jobs that they have to take on. There's no way they can pay these student loans back anyways.
I'm gonna get my political jab in here.
Hmm.
Okay, y'all can tell by the way I'm talking, I'm not quote unquote conservative. So
Hmm.
next time I hear a conservative talking about less regulation, you don't want all these regulations, you don't want government involvement, I don't want to hear you complaining about student loan
Right.
because only government could have stopped this, but it didn't. Government failed to stop it. We need the government to do its job. You know, so yeah, if they're gonna be big and present, they gotta at least be effective. But this time, government completely let the people down.
Yeah, absolutely. I mean, when you think about TARP, why install something like TARP but not install something similar for the people? I feel like if you're going to bail out the Wall Street, why can't you bail out the people on Main Street too? And that's and bail out the people on the corner, because those are the people that are really going to be uh, the canaries in the coal mine going forward as to where your economy is going to go. And if you have all these people, all these millennials saddled with debt, and they can't buy a house and they can't buy new cars, and we've covered many articles about this where uh, all your all auto manufacturers can't move vehicles because millennials can't afford to buy vehicles now because they're saddled with these student loan debts, because that's affecting their credit score, and their credit score says that you're too risky. Um, and because you're too risky, uh, we're not going to give you this loan for this car. So they're not buying cars. They're not buying at first time. They're not first time home buyers. They're living at home with their parents. Multi generational living now. People living, with their grandparents. All because of student loans, in my opinion. At this point, you can really just point it directly back to the common denominator of someone hustled these people into these classrooms and said you were gonna, if you studied grasshopper uh, biology or something like that,
Anthropology, yeah.
you were gonna have this wonderful job, and everybody was gonna be happy, and you were gonna live happy ever after, and that didn't happen. You can see the direct correlation to millennials not getting married.
And if you have millennials, and what the oldest millennial is, what, like 34, 36, somewhere in there.
Yeah, that's the latest 35.
Okay, so if that's if they don't have a disposable income, where's all this economic growth that people talking about that's coming. It's all smoke. I'm not buying it.
No, and now you see the gig economy is taking place with millennials now because jobs aren't paying enough. The jobs that they're getting aren't paying enough. Working at Costco and Walmart, that's not going to pay off your student loans and afford rent in DC. I don't think
Yeah,
so.
yeah, but then unemployment is low. It's historically low.
We'll let them tell the story.
Yeah, just like the wages,
Mhm.
historically low.
Yeah, and boosting the minimum wage rate to $15 isn't going to change tiddly uh, uh, for a student. I mean, a person who's saddled with student loan debt. That's not going to change anything. That's going to only give them a little bit more money to buy some lunch, but that's not going to actually. They're not going to walk in and get a new deal for a first time home buyer.
Yeah, what were the what's that? Welfare, um, Walmart workers are on welfare.
Yes, I think it's something like 2/3 of Amazon and retail, just retail in general, not just Walmart, but retail actually qualify for food stamps. 2/3.
Oh, it's depressing.
Yeah, it is. But like Nate says in the chat, well, why take out loans if you have why borrow if you don't have any intention of paying back? Well, what other way can they get into college? Can't get in by paying out of their pocket. I mean, you're talking $1,500 per class, and you got to take 35 to 40 classes,
Well,
if not more.
the system is set up to basically, if you look at it, all doors are closed except the one to the military. That's, I mean, I'm not necessarily pro that choice, but it's there, and that's the only free ride.
Hmm.
You gotta bet your life.
Well, that's not even a free ride anymore either. I mean, they're getting very strict on their entry rules, their entry guidelines now. I mean, you almost damn near got to have some form of college to get into the military now,
Wow.
and they're going after college graduates who already completed their studies that is that align with the military agenda. They want those people in there. They want STEM graduates now.
So get a trucking job while you can.
It's the gig
That's
economy, man. You better press some CDs. Get a disc maker.
nah, that was you about what, about 15, 20 years too late on that one.
Yeah.
You're right. That's right. That was the move, man, about 15, 20 years ago.
Hmm.
That's who was that, Master P. There you go.
Hmm. Showing out the trunk of his car.
Yeah.
Yeah, this next one is from WallStreetJournal.com. Young, urban, and poor Africans fight back. Lack of economic opportunities for better educated people on the move drives a backlash against some of the continent's most enriched leaders, entrenched leaders. Sorry. Anti-regime protests in Sudan, an attempted coup in Gabon, and opposition leader inaugurated as president in the Democratic Republic of Congo. Bloody demonstrations against spiking fuel prices in Zimbabwe, driving the backlash against some of the continent's most entrenched leaders is a growing sense of discontent among many young and increasingly urbanized Africans over their lack of economic opportunities. Those anti-establishment forces, accelerated by a bruising commodities crunch, will resonate as the continent's yeah, it's behind a paywall, but it's still an interesting article to read. It's never making any sense to me why you expect poor people to pay for education, but then it, your tax dollars already pay for infrastructure that allows for these institutions to exist, and you want them to pay to actually get inside these institutions again.
Yeah, this is a recent thing that America got sold on this idea that it's your responsibility to educate yourself. Now we've always had paid colleges, but Until recently, corporate America accepted it as part of their responsibility to train people on the job.
Mhm.
And somehow, as a culture, we Americans have allowed that it to become acceptable for corporations not to train people on the job. You have to come there with a degree or certification, qualified. No, in many of these jobs, they can teach you on the job. That's how America was made. It's only recently that everybody walked into the workforce with some prior training.
Mhm.
That's a very recent thing.
You used to have something called Job Corps.
Yeah. And so we accept this as normal,
Mhm.
you know.
It's I would probably
I
say it's
mean, they're
pretty
not
blatant.
giving you a pension. Corporations don't give you, we let them off the hook with
Mhm.
the pensions, okay?
Mhm.
And so they hardly, so now you pushed everybody into a 401k with no finance education, no investment on how to invest, no education on how to manage your money and make those investment choices. And there's no uniform rule about what the match is from the corporation to what you put in it. And so we let the company off the hook with retirement with retirement via the pensions, and we let them off the hook with on the job training. And so now we wonder why we have, this half of 1% that owns everything. It's got all the wealth.
Mhm.
It's called excellent planning. You know, this was a heist, good robbery, excellent robbery. I'm sure
All right,
Michael Moore can explain it better in one of his movies, but
mhm. Let me get to this next article. All right, this next one is from Forbes.com. How this entrepreneur launched his startup in an economic downturn and is now managing $15 billion. John Stein is the man on a mission to help you make better returns with your money. He's the co-founder of online investment advisor Betterment, one of the first fintech companies and a startup that launched in the pit of the 2008 financial crisis. Now he describes bringing in $10 million in business as an average day. As a recent guest on the Dealmakers podcast, John has been sharing with other entrepreneurs his take on how to handle money with co-founders and your founding team, as well as what helped the company gain so much traction and why launching a startup in an economic downturn can actually be an advantage. The birth of customer-centric banking. From around 2003 to 2007, John Stein was working as a consultant for banks in like First Manhattan. At that time, John was already getting the sense that while well-intentioned, the banks the banks just weren't in the habit of putting customers' wants, needs, and their best possible investment performance first. He took the money he was earning in consulting and spend it and spread it into seven different brokerage accounts. He says they were trying. He says they were quote trying to direct me to do the things that might be best for them, but not the things that would be best for my long-term wealth. John says he thought there should be financial advice that was accessible and aligned with the customer, but recognized it just wasn't going to come out of existing this industry. That gave birth to Betterment. Today, the company offers a suite of financial products for individuals, including cash analysis tools, 401ks, and IRAs, the two-way sweep to optimizing checking, saving, and investment dollars, high yield savings accounts, tax harvesting tools, and is working on a vision for a self driving wallet. Betterment even offers a white label product used by other financial advisors and a 401k platform for employers. As of the beginning of 2019, Betterment was managing $15 billion for 400,000 customers and had 250 employees. Betterment officially launched in New York City at TechCrunch Disrupt. John had a tight deadline and received regulatory approval just the day before the event. He recalls it as, quote, one of the most exciting and terrifying days of my life. He says he remembers staying up basically all night and preparing my speech to give on stage, and I had like timestamps every time I edited my speech that night. It was like every 15 minutes all night long. I was up making some edit to to it or whatever. I really obsessed over it. I was pacing around all day before delivering it. When he gave his presentation, and the crowd applauded, and all of a sudden they had customers. They signed up the first 300 customers in that first week. I, um, I don't want to read too much into this, but it's just very interesting that he was in the right place at the right time for starting this app. What do you think about this, Dollar?
Um, Nothing deep. People just need help. Any help is good. We got Paul.
Oh, Paul
Paul
Bryant,
Bryant. What's
what's going on,
happening,
brother?
bro?
What's going on?
Hey, gents. Oh, good morning. How are you?
I'm good.
What's happening?
Good afternoon.
Oh,
Good evening.
I'm sorry. Good evening. It's been a long week, man. Long week. From meeting to meeting to meeting to meeting. Uh,
Hmm.
I just got a chance to read this article about maybe 20 minutes ago, and I like it for the fact that I see it as a case study of something that some people like. People need. People need to. Black people, African American, whatever term you so choose to call yourself, can use this as a case study to generate um, economic and financial power
Hmm.
and cash flow. Okay, to get out of the, as Dollar Will so eloquently stated, all right, which no one is talking about, how the American dream of going to work for a firm for 30 to 40 years and resting on your pension and your retirement and everything else, that's been pretty much done away by corporate greed. Okay, so going into learning and generating financial acumen, investments, going into business, multiple streams of income are things that I like to think one of the ways that black people need to be looking forward to generate self-determination and success, because there is absolutely no reason that it's viable. Individuals like this are showing that it's viable. You know, as I said, I attempted to do much much along the same lines when I worked on Wall Street, and I got such pushback and so many walls. I gave up and I got frustrated. I went directly to people, aka so-called grassroots. Had success there. People were short-minded, ended up with my two business partners. Point is, it's viable and it does work. And to use this as a case study and to do business with people of like minds, it's a viable path. All right, there are many different paths. No one is the right one, but this one clearly is viable and works. So please forgive the rants. It's been a long day, a long week. I'm just tired.
Hmm.
I say ran on.
Hmm.
I think you put a bow on it. You know,
No.
I'm optimistic that that with technology, younger generations, or even not so young, even middle age people, we don't have that foe. I'm trying to squeeze in there, y'all. I can put myself in there. They don't have that phobia about technology.
Hmm.
So if they can put something in the form of an app, it seems that people have a willingness to try to learn new things if it's delivered in a using technology. So I'm optimistic about people in general, blacks in particular, that we're going to become more entrepreneurial, more business savvy, more embrace the need to um, get active in investing. I'm optimistic.
I think you make an absolute excellent point. I look at my mother's generation, uh, so-called baby boomers. Technology to them is like a foreign language. And I look at my generation, Gen X. You know, a lot of the things that people my daughter's age, who's 22 now, almost 23, the things that she takes for granted, to me, I'm in my mid 40s, and a lot of that stuff was science fiction when I was her age, some 20 plus years ago. So I'm really a pie in the sky optimist, but I actually second your sentiment on that, and I honestly think that these generations going forward, especially my daughter's generation and even those younger, that they will embrace technology wholeheartedly. Like my generation was the first to begin to embrace it. And I honestly think that is the future. And I think that more black youth need to be embracing economic and financial wherewithal and emerging technologies.
Mhm. Let me get through this article. This one is from BitcoinExchangeGuide.com. Bitcoin trading volumes reached their highest peak ever in Venezuela via local Bitcoin's data. As the economic crisis gets worse in Venezuela, the citizens of the country are starting to use more and more Bitcoin. For the first time ever now, the usage of BTC in the country has surpassed 2,000 BTC, around $7 million USD in a single day. The numbers come from local Bitcoins, an exchange that works on a P2P basis. Venezuelans also use other exchanges, but most of the centralized ones are either based in Colombia, Brazil, or other countries. So the estimates are impossible to be made. When we consider the trades in Colombia, 640 BTC changed hands yesterday, while $5.3 million USD was transacted in Brazil on a single exchange in this time frame. Certainly, some of the people who actually exchanged the money were from Venezuela, but obviously not a big part of the numbers. The volume of Venezuela, despite not being as high as Brazil, for instance, is very significant. Though, especially when you consider the crisis that Venezuela is in, and the fact that Bitcoin trades rose 4 times in about half a year. With the collapse of the Venezuelan bolivar, the local fiat currency, and inflation that reaches 1 million%, the situation is certainly very difficult. According to some reports, the authorities from the country may be seizing gold in cash, so using Bitcoin minimizes the chance of having your assets seized. The fact that there are currently two presidents in the country only makes matters worse. The president of the country, Nicolas Maduro, is against the self-proclaimed acting president of Venezuela, Juan Guaido, which is the leader of the opposition. Yeah, that has anything. That has nothing to do with it. But that's interesting to see that Bitcoin is hitting some volume over there. But that makes sense. People are trying to get around capital flight rules. So that's where that's coming from.
Okay, let me answer. Help me understand it. So, are we are we really saying that the value of their currency is like falling faster than Bitcoin?
It's moving at 200% per week since January.
Wow.
But that's due to the political climate, not so much because it's an inferior currency. It's more about the political climate. It's driving the value down, and it doesn't help that the United States put sanctions on the country. So
I mean, that's surprising. You wouldn't expect to see Bitcoin be favored really anywhere at this particular point. Those are some heck of a choices, you know.
Well, I mean, you're going to use Bitcoin at some point because it's the medium of exchange and exchanges. So you change one crypto to another, it's always going through some Bitcoin exchange, anyways.
Frightening. What say you, Paul?
My knowledge is on cryptos is extremely limited. I defer to you gentlemen on this topic.
Yeah. Where's Lionel?
He's having network connectivity issues.
Gotcha.
New investor crypto index opens a retail Bitcoin for Bitcoin investors will help track price volatility. Investor, an application used for trading cryptocurrency in retail, has recently revealed the start of its cryptocurrency index, called the Investor Crypto Index. It is accessible by all current and new customers of the Investor app. It was created as a way to assist investors and stakeholders with tracking and predicting the flux in the price of different cryptocurrencies due to their general instability. The new index gives stakeholders the opportunity to not only track the wavering price of crypto, but also compare its behavior against all others. Also, the index will not stick to just the currencies alone, as it will accommodate other digital items like payment coins, security tokens, and utility tokens. Yeah, this is more of a press release. So it's a new app, Investor.
Well, this is right up my alley. You know, because I think some people are not comfortable buying an index. You're just buying a price point on a chart. You don't really own anything but that price point. So it's just it's just pure trading. And that's all right with me. In fact, it's another way to make money. Again, my interest in cryptocurrency is not in ever holding the currency. I just want the price appreciation. It's just a vehicle to trade for me, and I could just as well be trading an index like that. So I think that's a good thing.
Mm-hmm.
It's like trading the S&P 500 without owning the 500 stocks. You just own the price position on the chart.
Mm-hmm. All right, this next one is from news.bitcoin.com.
I'm sorry. I just wanted, Paul, how do you feel about that? Are you like to actually have shares, or how do you feel about the concept of buying index price point?
I've always wholeheartedly supported owning an index because it mitigates risk and it's an excellent way to make money while you mitigate your risk, whether it's spiders, ADRs, S&P funds. Owning an index is an absolutely excellent way to make money. And I know a lot of people feel like there's some black magic to it, as with technical trading, but there really isn't. Once you understand the basic concept, it's really so simple, and it is an excellent way to hedge your bets if you're buying individual stocks.
Now, let me see. Do I have this right that when you're buying it, I'm trying to differentiate between the index in this case and say a mutual fund. So if I am I correct in that in this index you don't own the individual the what they call it the constituents of the index the instruments that make up the index. You just own a price point on the index. Am I do I have that right?
For the most part, the way it's weighted in that it's basically set up like a mutual fund, but it's weighted. So like with the S&P 500, you won't own all 500. You may own like 50. Like so it's weighted. You know those stocks that tend to have the greatest impact on the movement of the average. So it's basically like a mutual fund, basically. At the end of the day, it more or less functions in the same way, but it's pegged to the overall average.
Okay, so at the end of the day, do I actually own shares? Or do I own shares of the underlying stocks, or do I just own a price point on an index?
If you're basically you're more or less correct. You are owning shares, but you don't have you don't have the right. The way it's set up, you don't buy and sell individual shares. So you'll buy these groups of stocks, and so they're all bundled together as saying, okay, this bundle, this is the actual, this is the index. All right.
Oh, and you don't have voting privileges like if you bought the share.
No, not at all. Not at all.
Gotcha.
It's not. It does not operate that way.
Yeah, see that doesn't bother me, but I know some people some like really old school investors they want to own the shares and with the voting rights and all of that. I don't really care. I just want the price appreciation. I'm sorry, Mike. I just wanted to hear what Paul as a Wall Street or what how did he view that. You can go ahead, Mike.
Okay. All right, this one is from newsbitcoin.com. Yellow Vest movement starts a new form of protest burning banknotes. The grassroots Yellow Vest movement in France has consistently made headlines across the world while protesting the country's monetary system and politics. For instance, on Tuesday, February 5th, about 18,000 Gillette, I don't even know how you pronounce that, joined a march in the French capital, walking side by side with another 12,000 CGT union workers. The protest also followed a demonstration on Friday, which showed employees claiming to work for the Banque de France banknote mill. The Yellow Vest Associated group threatened to burn large slums of paper bank notes. A news.bitcoin.com correspondent from France explained how the bill burners are demanding fiscal and social justice in a unique fashion. Quote, in the last 15 days, we've burned passport paper, bank check paper, and gray card paper for vehicle documents, explains the banknote burning group's video on Facebook. Quote, but the French government is completely deaf, so we move to the next level. If the French government continues to make it seem as nothing scandalous is happening, we will make this so all the world will know what's happening. News.bitcoin.com has covered the Yellow Vest movement in the past and how many well-known Bitcoiners have explained that uh, Gillettes should really hit the banks where it hurts by moving from fiat to Bitcoin. At the same time, the world economy has been shuddering once again, and economists are predicting another global depression similar to 2008. Many regions like Venezuela, South Sudan, Turkey, Haiti, Zimbabwe, and Argentina are suffering from economic hardships. I want to stop reading here because I don't think we really need to read anymore. But I thought that quote was, that one line was actually very interesting. At the same time, the world economy has been shuddering once again, and economists are predicting another global depression similar to 2008. Dollar Will, you've been talking about this for a long time. What say you?
It's in the charts. I have no profound fundamental explanation. It's just a convergence of things on the charts.
Mhm.
You know, the dollar strength is real. I mean, people don't buy it because we're still kind of going in a triangle pattern. It hasn't broken out of this triangle. So everybody sounds like they're right, the bulls and the bears. So until the dollar breaks out of this triangle, then people will really be convinced. But yeah, this is the big one. This is ugly. That's why in every third article, people are hearkening back to the quote the Great Depression era because they know how to read charts too. You know, it's weird when you look at the charts and you're trying to figure out what fundamentally has to happen to justify this movement and the price, and then you start to see things just kind of unfold in that direction. It's really strange.
Mhm.
You know, it's like it connects to what we talked about earlier when you were talking about the debt of the students, student loan debt. Well, if young people are the heaviest consumers. When you're young, you consume a lot. You buy a lot of things. You're getting cars, homes. As people age, they get a little smarter, and they don't spend all that money to impress people. You know, when you're younger, that's important. You're trying to attract a wife. You're spending conspicuously on your children. You want your child to feel like they're privileged. Okay, relative to their peers. So it's a lot of pressure on you when you're young to look the part and spend. And when the young people aren't spending, you go, okay. And then you're looking on the charts and you're seeing the price of gold when it was up at 3,000 or whatever, and the dollar and then housing was off the charts and bonds were off the charts. And you're like, well, wait a minute, this can't continue. And then, so it's in the charts.
Mhm. Paul Brown, you have anything you want to add to that?
Well,
Give me the fundamental break. Give me some more fundamentals, Paul.
well, classically trained economist, and typically you look at lagging economic indicators. And historically speaking, the U.S. economy operates in a 7-year cycle. So as the economy started to turn around in 2010, the lagging economic indicators did not start to turn around until 2012. So we even push that out to 2013. So 7 and 2 is 9. So 2019, historically speaking, this economy is due for its 7-year economic downturn. You could push that back to 2017 for leading economic indicators, 2019 for lagging economic indicators. Again, everything I just said is fundamental market analysis, since I am a classically trained economist when I worked in that world. I say all that to say that a lot of things look strong, a lot of things look catastrophic. If you look at a lot of, again, use that word fundamentals, this economy is this economy is poised not only for a recession, it's poised for a depression. It is
Thank you.
poised
Thank you.
it is
That's that word
poised
that nobody
for
said.
a catastrophic implosion. This economy, if you look at a lot of the fundamentals, it is smoke and mirrors. It is a house of cards waiting to implode and collapse to something we haven't seen since 1929. So honestly, I think it's out the window. And at times like this, even though most people on Wall Street will never admit it, at times like this, they look to what the technicians are doing, because those guys tend to have the uncanny ability to see things coming down the pipe before the rest of us do.
I
Then,
got
as they tend to be more conservative, tend to make more money on the highs, chasing the emotion of things. But right now, me personally, for my money, I'm following what the technicians are doing and even taking a fundamental analysis. This economy is poised for a depression. When that's going to happen, I can't say. But it is unsustainable. The fundamentals are unsustainable, and they've been unsustainable since about 2016, 2017, which, funny enough, falls in line with the historical 7-year cycle of this country's economy.
But I will say this: when the technical traders and the fundamental traders agree, you look the hell out, because that doesn't really happen a lot that we agree. And when we do, it's no reason to doubt that call when the fundamental and the technical traders are on the same side. Okay. Now you mentioned the word deflation. Why is it that we aren't hearing people use that word? The TV economists. How come? Why don't they ever say that word?
You know why? Because no one wants to revisit 1929 to what 19 to 1929 to what 1942, 41.
Right. Right.
Because the economy didn't really, even though a lot of people will say 33, 34, I still strongly disagree. The economy didn't really turn around until the war started. Yes, we had the great jobs program. Yes, we had a lot of highway programs. Nothing like the Eisenhower highway system. Less a lot of people were working, the public works programs, but there were soup kitchens and people were not buying things. The economy was stagnant. All right, they were still rationing. Um, my father, man, he rest in peace. Grew, grew up in the Jim Crow Deep South with rationing, even down there. It wasn't until the war that things really started to turn around, and that's when we saw the rise of the military-industrial complex, which is really just another name for the warmongers, so for the ironmongers that popped up in the late 1890s, making money off of bloodshed, selling arms. But the point is, to specifically get back to the question that you asked me, no one wants to use those words, depression and economic implosion, because those are doomsday trigger words. When people hear that, they panic. And the last time that happened, people were literally jumping out of windows. So no one wants to use those panic words.
Yeah. See, we hear the word inflation a lot, but we very rarely hear deflation.
Yeah, because that's
What
deep.
is a deflation? What does that look? From my basic understanding, I want you to flesh it out and correct me, of course. Is that's basically the reverse of inflation? The prices go down.
Yes and no, they go down, but it's more of a sideways lateral move. You heard of stagflation, deflation is more. It's more stagflation, but stronger. Where yes, as you say, prices are going down, but they're slowly and steadily going down. But the economy is sideways. So when the economy is totally flat, there's zero growth, there's zero job growth, there's zero economic growth. Home sales are flat. Large ticket items are flat. Um, New construction is flat. All the leading economic indicators and the lagging economic indicators are both flat. Nothing's growing. That's stagflation. So when you start to see prices also slowly go down and economic pressures start to move the economy down, and then jobs slowly start to go down, then you move from stagflation into deflation. Japan, which no one likes to readily admit, right around 89 when they had their recession overnight, they were said to have come back in 1992, 93. Realistically, Japan has been in stagflation for 20 years. But so so deflation is a little bit more. It's deflation is stagflation, just a little bit, a small amount of a downward curve and downward trend to that sideward movement, but it's still not severe enough to move into the word recession. And of course, we all know what a depression is because we've seen that once. No one wants to see that again. But if you look at all the economic factors and you take off the rose-colored glasses and you stop the optimistic talk, everything points toward that. However, everything is still, a lot of things are still going up, and a lot of sectors are still doing well. Some are moving sideways, but some are doing well. So you look at it and it's like, okay, everything says we should be heading towards a recession, but for whatever reason, we're not. But no one can come up with concrete explanations as to why that's not happening. So I look back to
But
name.
then you're talking about again, they have not come up with reasons why, but they're reading lagging indicators. So we could be there already, but the data just may not be showing it.
We
I
could.
mean, right? That's a question.
I tend to agree with your assessment because some of the economic some of the thing is this: a lot of the leading economic indicators, they're fluctuating. Some are up, some are down. But then some of the ones that are down for a brief while, they'll come up. Then some of the ones that are up for a brief while, they'll go down. Same with the lagging economic indicators. So that's the reason, that's the basis for me saying that when you look at the fundamentals, it's unsustainable. We should be heading into a recession.
What's the main? What's one of the top key lagging indicators that we should pay attention to?
Construction, um, farming, farming payrolls, farming production, uh, travel. Um, what is it? I'm trying to think of the name for it. Hotels, leisure activities, things,
Hospitality?
things like that. I'm sorry, Mike.
Did you mean hospitality?
Yes, yes, thank you. That's the term. So when you look at those lagging economic indicators, industries industries that tend to reflect the health of the economy, because the economy is healthy, those sectors can prosper. So that's that's a simplistic way to explain what are lagging economic indicators. Okay, if the economy is well, the financial markets are doing well, then construction does well because it takes a lot of loans and free capital for investors to invest in putting up high rises, for municipalities to put money towards municipal works projects. Same with the travel sector, same with the hospitality sector, same with the farming payrolls and farming productivity. So again,
Okay. Give me a couple of leading. Give me just a couple of leading
those,
indicators.
those would be the obvious: new car sales, retail sales, new home sales, new home resales.
So when Mike read the last couple of weeks, he's been telling us about some data from Apple, and the sales of Apple are declining. So that's a leading indicator. So that means we will get that data first, and in the near future, if we are in stagflation and possibly deflation, those lagging indicators should start to roll over. Now that we're getting some of the uh, bad retail numbers, that's the flow, the sequence of things.
Correct. So historically speaking, lagging economic indicators tend to make their presence felt 12 to 24 months after the leading economic indicators have spoken.
So basically, we could be significantly And from a stock chart perspective, which is the same as from your retirement account perspective, significant damage could be done before the lagging indicators confirm what you already know.
That is correct. And you just mentioned Apple, and I believe we spoke about a week or 2 weeks ago. You asked me some questions about what I saw from the economic numbers released by Ford. And the thing that stood out to me, without even reading the article, because I was a bit late to the discussion, what stood out to me was in the last quarter of 2018, about 70 to 80% of the year's revenue was made in the last quarter, when historically that's the softest time of the year for automakers. So that stood out to me. Now, Apple, who has absolutely been a leading economic indicator due to the due to the core nature of their business model, they're slowing down. When a when a manufacturer, which is what they are, stops releasing their manufacturing numbers, they're telling you they're panicking, because they have always put it out front in your face. We're selling X amount of iPads, we're selling X amount of iPhones, X amount of iMacs, X amount of MacBook Pros, X amount of Mac Pros. I'm sorry if that's the correct name. Now they're saying we're not giving you unit sales. Well, if you have a market competitor, and if the strength of his business are his unit sales, but now he will no longer divulge his unit sales, he's telling you he has zero confidence in the strength of his unit sales. That is a major, major red flag. That's one of the things that you're taught in business management 101.
Yeah, that's what I thought. Because, like I said, long ago, I used to be a fundamental trader, and that spooked me when Apple said they weren't going to break out their sales to show you the unit sales of, say, the phone versus the desktop versus, the watch and whatever. I'm like, whoa, what company doesn't take the opportunity to brag about good news?
Well,
Nobody hides good news, okay? They hide bad news.
that's that would be like um, Ferrari does 65 to 70% of their business overseas. Ferrari's largest market historically has been the United States. Ferrari, since I want to say 2008 to 2010, has been saying that their largest growing market has been China and the United Arab Emirates, Dubai, Qatar, Doha, Bahrain. So, if for whatever reason Ferrari tomorrow tells you that they're going to stop telling you what their sales units are in America and China and the United Arab Emirates, what would that tell you? That things are going soft.
We got
If
anti-gravity wrote Dollar General and Dollar Tree are lagging economic indicators. If you see them popping up more and more, you know something is up. Okay. Go ahead, Paul.
you know what, that would make sense, because if people are losing confidence in the economy, then people are going to tighten their belts when they go to the supermarket. So there is a lot of validity in his statement about that. You know, again, as I said, historically speaking, any business that draws its strength from the economic strength of the economy is considered to be a lagging economic indicator. People are waiting to see that things are good before they spend money in these areas. Those areas are what are called lagging economic indicators.
Anti-gravity, you are being summoned to the panel. so I can benefit from you and Paul, chopping it up on the fundamentals,
Let me
So,
get let me
go
get to
ahead,
this
Mike.
next article.
Go ahead.
We got 2 more articles to go, so I just need to get to these next 2. All right, this one is from Bitcoinist.com. Bitcoin ETF is inevitable, says SEC Commissioner. Speaking during a soon-to-be-published interview with Congressional Quarterly, Jackson stated his belief that SEC-approved Bitcoin ETF is inevitable. So far, the commission has rejected all prior filings submitted by different funds looking to launch a Bitcoin ETF. Quote, eventually, do I think someone will satisfy the standards that we've laid out here? I hope so. Yes, and I think so. Getting the stamp of approval from the deepest and most liquid capital markets in the world is hard, and it should be. Once we make it available to everyday mom and pop investors, we are taking risks that Americans can get hurt. Jackson's comments are in many ways indicative of the argument consistently put forward by the Commission against Bitcoin ETFs. The SEC has, in the past, brought up issues relating to liquidity, custody, and market manipulation. Emphasizing these points, the SEC commissioner touched on the Winklevoss Bitcoin ETF rejected in July 2018. According to Jackson, the decision to deny the application stemmed from the inability of the trust to satisfy the SEC standards of preventing fraud and market manipulation. Quote, the case that we had last year involving the Winklevoss Trust, in my view, was not a difficult case. So there you had a situation where the risk of manipulation and for people getting hurt was enormous. The liquidity issues in the market were very serious. At the time, the commissioners voted 3-1 against the Winklevoss ETF, with the only yes vote coming from Hester Pierce. According to Pierce, the SEC was wrong to reject the ETF, saying the commission failed to interpret its own laws correctly. Meanwhile, the quest for SEC approved BTC ETF continues in 2019 at the start of the year. Bitcoin has reported that Bitwise has filed another application after having been rejected by the SEC in 2018. After initially withdrawing the VanEck Solid X BTC ETF proposal, SIBO refiled the application a few days later. The Winklevoss twins also stated that they will keep pursuing the approval of their Bitcoin ETF, particularly after Gemini become the first to pass SOC 2 examination. In early January 2019, they stated, quote, we are committed to ever making an ETF a reality. The U.S. Securities and Exchange Commission, SEC, could regard Gemini's SOC 2 report as a factor in favor of its possible approval of Winklevoss petition for a Bitcoin ETF. So, Dollar Will, you've been, beating the war drum on cryptocurrency ETFs. What do you think about this?
I'm still optimistic. I think it's inevitable. I think it's the wrong time at this moment because the price is still falling, and because of that, I don't think Wall Street. I don't think enough pressure from the industry exists to force the issue right now, because nobody wants to really be associated or identified as a cheerleader for cryptocurrency right at this moment. But the bottom will come. Nobody wants, like I said, nobody wants to like wear the egg, be seen as the cheerleader for a diminishing asset. But when the technical bottom comes in, the greed of Wall Street is going to push this matter. So it won't just be the Winklevoss twins. It'll be lots of other forces clamoring for this because people are going to want the money. They're gonna want to get in on it, and it's the majority of the the lion's share of the cryptocurrency marketplace is going to be people who just want to buy a simple index or ETF. They're not going to want to pick and get XRP over Ethereum and learn about use cases and all of that. They're just going to want a simple way to get a basket of cryptocurrencies,
Hmm.
and that pressure is going to mount when we reach the technical bottom, and Wall Street greed is going to make this happen. Bless them. What do you think, Paul? You think Wall Street is going to step up and push for a crypto ETF?
Difficult to say because on the one hand, I see that it's going to take younger minds to adopt it it's basically new technology, and Wall Street are extremely reluctant to embrace anything new. On the flip side, Wall Street is always quick to embrace anything that can put a boatload of cash in their hands. So I have to temper the first statement that I made with, if someone feels they can make a boatload of cash and get around any regulatory issues, then they're going to push it, because anything that is going to make these guys money, they they have they have people on the payroll whose sole purpose is to figure out any regulatory issues. So once they can once they can sort of bring the concerns and resistance of new technology and making money and regulatory issues, once they can merge enough of those three circles, then I see this receiving SEC approval. Again, when that's going to happen, I can't say, because the way that I see it, all three of those circles right now have e- e- equal weight. I don't see one having any more weight than the other.
I'm betting on greed.
Mm. Well, you
In
know what?
greed, I trust.
Hey, like Gordon Gecko said, greed is good.
Right? Greed will win out, especially if we look around the country and around the world and we see other countries creating, similar products.
Oh, you you know what, Mike? I don't know if I sent you an article. If I'll have to look for it, because now, damn, and I don't remember the nation offhand, but there was a nation in the EU. I want to say Switzerland, but it could be another one. Maybe Austria. I don't recall offhand. Don't quote me. However, what they're doing is they're building a public works project. They're building a tunnel through some mountains. So it's a public works project. However, instead of floating muni bonds or treasury bonds to fund it, they're floating cryptocurrency to fund it.
Hmm.
And I thought that was absolutely amazing. Again, you and Lionel are my SMEs on that. So I'm gonna look through my history of that and try to find the article and send that to you, so you can make much more sense of it than I can.
Yeah, I think I've heard of that before. We might have covered it about. I think it might have been Sweden or maybe just Switzerland. It's one of the S countries, one of the
Yes.
Nordic states. But
Yeah.
that's actually a very clever idea, because people who own cryptos, they have a boatload of them and they can't really put them anywhere, right? So, where what other way, what other better way would it be to utilize your cryptos and to put it inside some form of real estate that's guaranteed to be up by the government itself? So you're holding the government to um, responsible that the property, which is the tunnel, would be reliably kept with your crypto investment. I see that as, I mean, I can't see how you can go wrong with that. I think that's a clever way of going about it.
Yeah, absolutely. And you know what? I'm gonna go out on a limb here and say that it's only a matter of time before governments and or municipalities begin to float bitcoins to finance toll toll roads. So instead of instead of relying on instead of relying on tolls to cover the debt service for muni bonds, they're going to somehow figure out a way to have that to have it service the cryptos. Maybe it's going to directly affect the value. I don't know, but I see that some way somehow as being the future, as maybe a way to either replace muni bonds and T notes, or at least to coexist with them.
So
Well,
you talking about states basically issuing their own tokens?
Yeah, because like I said, whether it was Sweden or Switzerland, they're floating cryptos. So in order to, it's basically instead of floating muni bonds or treasury notes, you're going to purchase cryptos, and that's how they're raising the money to build it. Same,
right.
You know what? When you think about all of the the free shit coins out there, wouldn't you rather buy a coin issued by a state?
That's what we were saying because it's backed
Yeah,
by the state itself, and the state's
yeah,
gonna have to honor it. But
that's
the
a powerful idea.
volatility, but the volatility aspect of it is even greater than what that the maturation of a bond would be. Or
Right, man, that's revolutionary right there.
yeah, that is
Because
very
you think about the market for bonds, that's just like considered like that's for stuffy old guys. But if the state got into selling, crypto tokens, cryptocurrencies, that would have broad market appeal.
mhm. Right. And I've also heard that there's a railway project that's supposed to be in place, a lightweight railroad project in place that's supposed to be backed by cryptos.
Right. I've heard excuse me. I've heard the same exact thing. And when I heard that, wow. I mean, so basically we're looking at the future right before our eyes.
Mhm. Yeah, because the people who have the cryptos are actually the ones who have the money. I mean, there's only about so many wallets on the market that have 2/3 of the cap of the
Hmm.
market cap for cryptos. Anyways, I think it's only like maybe two handfuls. So
Wow.
yeah, there's only about for the $20 billion market or the $60 billion market that's in place. There's only about 8 to 10 people or 12 people that actually hold the largest wallets.
That's not reassuring.
Well, Max Kaiser is one of them. Max Kaiser is one of them. He got into Bitcoin in 2012 when it was at its bottom rate, and when it fluctuated past 20,000, he really made out like a bat out of hell. So,
Is he hodling?
oh yeah, he hodls all the time. He talks about it in the show, on RT. So, I mean, he has over 100,000 coins. So
Wow,
you do the math on that.
right, good stuff.
Yeah, let me hit this one last article, and then we'll open up for open mic. All right, this one is from CryptoBriefing.com. Attention wealthy. Poppy makes buying property easier. A new blockchain project is making it easier for the wealthy to buy real estate by reducing the fees and friction costs normally involved in acquiring property. Poppy has completed the first ever sale of residential property on the blockchain in the highly sought after Bay Area in California. The real estate platform announced on Thursday that it had facilitated the sale of a three-bedroom house in Daly City, just outside of San Francisco, for a reported $917,000. Although the numerous property deeds across the world have been registered on the platform since May of last year, today's news marks the first real estate deal where the buyer's agent actually submitted the offer through Proppy. It's the second deal for the platform after Proppy handled the sale of 20 acres of land in Southern California paid entirely in Bitcoin last summer. Proppy is both decentralized title registry. No, Proppy is a decentralized title registry and a platform to transfer property ownership through Ethereum smart contracts. Founded more than 3 years ago, it wants to become a one-stop shop for buying and selling real estate, allowing properties to communicate and submit relevant paperwork as well as the funds on the blockchain. Quote, Silicon Valley has become one of the world's hottest property markets, denoting the perfect example for the market where high levels of trust and transparency throughout the transaction process are paramount, said Natalia Karaneva, CEO of Proppy. In a statement to the press, users don't even know that they use blockchain. It's ideal for foreign buyers. The first two real estate deals have been in Proppy's home state of California. The company has had, quote, loads of inquiries from other property owners in the Bay Area. But Proppy is aiming for an international audience. According to CEO, there is currently a high fail rate in the current system because of the difficulties wiring large sums of money abroad. Not only is it expensive and time intensive, a fluctuating exchange rate constantly changes the asking price in the buyer's home currency. The project is currently in talks with a handful of Chinese investors interested in buying property in US and UK and Greece. It's unlikely that many deals will be transacted in digital currency for the foreseeable future. The CEO explains that many users simply aren't, quote, very inspired by cryptocurrencies. With sinking prices and an extended bear market, she admits that, quote, it's impossible that mainstream adoption won't happen as fast as we thought last year, but there's still a compelling case for using blockchain. CEO claims that many estate agents she knows are, quote, very excited to use it. Putting these and other relevant documents on the blockchain effectively makes them disaster-proof against such things as fire, fraud, and theft. This is actually a very good idea. Although I can see it being, I can see the Chinese taking advantage of this. They have a lot of cash to burn, and a lot of property is going to be going up for sale in the next recession. So,
right. So I'm trying to keep it straight in my head. So what's the blockchain aspect of it? So you're talking about putting all of the data related to the transaction on a blockchain, that including like title history.
Yep, title, deed, registry.
Now, so that means that someone would have to go and put the title history on the blockchain. That's a lot of data entry.
Well, you can actually scan a lot of that stuff in with OCR, right?
Right. Ooh, do you really want to use OCR for that? It's got to be It's got to be near perfect. The salt with OCR make a mistake and change ownership of some property.
Well, you can actually, what I'm saying is you can actually take your smartphone or your iPad or whatever it is that you're going to use and actually take a screenshot of that with your high definition camera lens, and that would just upload it right up to the registry. but then
Gotcha.
it could actually extract. There's programs that can actually extract all that data and put it into a smart contract.
Mm.
Not a smart contract, but it could put it into a document form or a smart contract.
Yeah, I think for me, the more I hear these stories on the brain trust when you guys introduce these new uses for for the blockchain, and the more I'm impressed with the blockchain, because the once the stable coins enter it alongside the cryptos, it's no better in terms of value. It's it's no better or worse than what we have right now in that respect. But in terms of the accounting, the record keeping, that's the huge advantage.
Hmm.
You know, that's the huge. I mean, money is going to always fluctuate. The value of cryptocurrencies and the stable coins and gold, all that is going to continue to fluctuate. There's no safety or advantage of that or inherent advantage of investing in one thing or another, whether that thing is backed by gold or oil and all these things you hear about. You can't protect yourself from the volatility. It still comes back to knowing how to read a chart and making a choice about where you think the trend is going and where's the safest place for your money. But beyond all of that, the revolutionary thing is the blockchain.
Hmm.
That's the thing.
Right, because it's tied in with smart contracts. Smart contracts allow forms of automation to take place because they're pre-written
Right.
agreements. So
Right.
that, yeah, that's a game changer in itself. So if there's if you bought the house at a certain price, and because you're going from one currency to another from a nation state, stabilization, what would stabilize it is actually a large assets like property like that. So
What's up, Antigraph?
Hello, brothers. How are you guys doing?
All right, all right.
let me
Even.
let me just get to this one last article. A couple of these aren't on the docket, but I think they're relevant for tonight. All right, this one is from CryptoBriefing.com again. Taking stock, blockchain technologies and exchanges. Blockchain technology has received its fair share of skepticism recently, as some contend that its transformative potential is a long way from real life application. They argue that the hype is just that hype, and that the revolution of decentralized systems and transparent democracy is just a utopian ideal. It is it is easy to point to the blockchain as an example of new technology that has yet to live up to its potential. However, while blockchain technology is maturing at a slower, more methodical pace than some might like, its real life applications are incomparable. Blockchain is already bringing new levels of security, efficiency, and accessibility to capital markets by eliminating intermediate costs, transaction delays, and convoluted systems of business. The blockchain is disrupting and decentralizing outdated structures while providing immediate platforms for growth in new and existing markets. Some 90% of the blockchain experiments probably won't make it into corporate use in the world of in the world of stock exchanges. Blockchain is unveiling groundbreaking initiatives with practical practical solutions to industry issues. The costly, exhaustive nature of intermediary involvement through banks or brokers is one area that blockchain is revolutionizing on a use case basis. Until recently, trading through third parties seemed indispensable. By verifying transactions and payments, intermediaries and values intermediaries add values while simultaneously building relations between buyers and sellers. However, these services, while vital, incur expensive fees and high commissions. As a result, smaller players are excluded from accessing traditional stock exchange models as they are unable to meet these costs. Blockchain is uniquely positioned to resolve the issues and is already displaying already being deployed for a long-term solutions. This is actually just a refresher for those who don't believe in the blockchain and the exchanges. So this is open mic, but so you guys can fire off what you want.
You know, as a former Wall Street investment banker, whenever these guys talk about the problem of decentralized exchanges being a utopian fantasy, I laugh hysterically because of the sheer hypocrisy of the business. Okay, because the biggest secret in my mind is called the price spread. When you buy a stock, you call your stockbroker, listen, I want X amount of shares of ABC widgets, right? I see that they're trading at 20, 25, 25 and 3/8. All right, great. Your broker puts in a ticket. He puts on the ticket full spread. So when that ticket goes to the floor, all right, it's being bought from one party at 25 and being sold to your customer, to his customer, which is you, at 25 and 3/8. So that 3/8 difference is called the price spread. That's what's called the bid and the ask. That price difference, the broker has the option to buy it for you at the bid or the ask, or he can buy it at the ask. He can buy it at the bid and sell it to you at the ask, and that's legal, and that's called the price spread. It's called making markets on the floor of an exchange. The reason why I'm talking about this technical aspect of how Wall Street works is that spread is that broker's full commission. So that's 3/8, right? So you take that amount of money and you multiply that towards the number of shares that you bought. You can do the math. That is a hidden commission. That's on top of the upfront commission fees that he's charging you, and this is all legal. All right. So blockchain and other cryptocurrencies, they totally remove that aspect. Unless I'm mistaken, you guys can inform me if I'm mistaken. So whenever the established quote unquote old heads, as Dollar Will calls them, talk about transparency and centralized markets versus this utopian idea of decentralized markets, they're full of BS, okay? Because that spread is how they hide huge commissions. Because a broker can charge you low upfront commissions, but if he's banging you for the full spread, and God forbid that there's the holy grail of a half a point spread, a half a point spread on say 5,000 or 10,000 or 100,000 shares, he's banging you for huge commissions and you don't even see it. You upfront don't even see that. That's hidden. And that's how there's billions and billions of dollars every day in hidden commissions generated by the exchanges. Okay? So I say all that to say with my technical in-depth rant and education on how the exchanges work, that they're full of crap when they talk about Bitcoin being a problem and a utopian idea of a decentralized exchange. The way that I see it, one of the problem is they don't want to lose the spread because that is huge hidden commissions for everybody, for the broker, for the floor traders, for the firms, for the clearinghouses. Everybody's making money off of your trade.
And you're saying that the blockchain makes everything transparent, the real price.
Absolutely. The way I understand it, I don't want to say absolutely because you guys are my subject matter experts, but from everything that I've heard from Mike and Lionel on this matter, the very nature of how blockchain operates completely removes that. There is no bid, there is no ask. There's an upfront price. That's what you pay. I don't know what fees are generated for the transaction. Everything has a transaction fee, but from what I'm understanding, you're only paying your transaction fee. You're not paying a hidden cost vis-a-vis a bid and ask price spread that the broker and the floor trader and the market maker that he's on the opposite end of this trade with are making. So
At least
again,
from my experience of using the crypto exchanges, I'd say they operate more like forex markets in that sense. But the fee is upfront, where you can see it. There's not like E Trade where you have a 499 every time you make a trade, but there is the fee of transferring it, and it's super low, much lower than I've seen on in forex trading. Uh, but there is a bid and ask. But from what I've seen, I haven't seen it where it's like that exchange is taking a position. It's possible that they are, and it's possible that different exchanges have different ways that they operate. It would be better if Lionel was here, but at least from what I've seen, that's how it looks like.
Yeah, but the basic point that Paul is making on you, the point of this is for you, Anti Grab. The point that the blockchain would be offer more transparency, and that would reduce the opportunity for the fat cats to keep skimming off the top. Are you do you accept that basic premise, Anti Gravity?
I think they still could. Yeah,
Oh,
definitely.
oh, you think
It
they
just
still
depends on
could?
which.
Go ahead.
It depends on the exchange,
Okay.
because different exchanges are doing it at different prices, which they shouldn't be. But on an aggregate, the prices level off. Between all of the different exchanges. Because I remember relatively recently, maybe it was like last year, there was a crypto exchange in um, where is it? I think was it like Indonesia or something, and basically everyone could tell that they were kind of strapped for cash because let's just say, for example, the I don't remember the exact numbers, but of a Bitcoin was like 33, they were offering it at 29.
Wow.
So basically, it was a play for people to go and start buying all those and then use that money for other purposes. So it's not a utopia, but it's more, you know, uh, I guess, more transparent than Wall Street in that regard.
So
But also,
dude,
even if
anything that
there's
has a
something
four
shaky going on, so even if there's something shaky going on, you can at least see it.
dude, anything that has
yeah,
a 4 point spread, you want to stay away from. Okay, and you also want to make sure that whatever portal you're using to look at your stock prices is showing you the bid and the ask. Everything does not
right.
necessarily show you the bid and the ask. Okay,
Right.
um, uh, Wall Wall Street, um, Wall Street. Well, we call them insiders, but you're people who actually work in the industry. Everyone has full access. The general public doesn't. Some portals show you the spread, most don't. So you may be looking at something you may not even know if there's a 4 point spread. I mean that's something you want to stay away from because someone is scamming hard.
Right. Well, this is where the transparency in Bitcoin comes from. I mean, cryptocurrencies, more generally, is even if one exchange is showing you, an altered price, people can see what the other exchanges are offering it at. So that's kind of why a lot of people, when they saw that this one particular exchange was offering the cryptocurrencies at a lower price, alarms went off for everyone. They're like, "Yo, we're not gonna buy it at that price because there's something fishy going on." But I think
Well,
the biggest benefit of the cryptos is, unlike, for example, here in the U.S. with stock exchanges, well, stocks just more generally, and I think it might be the same with Europe, is good 90% of people who own stocks are institutions for the most part. It's not individual people. Um, but I didn't know about the thing that Mike was mentioning earlier, but it kind of makes sense where a large amount of like Bitcoin and Ethereum are owned by a handful of people. But for the most part, cryptocurrency and the exchanges in particular is just regular average people who are investing in it for the
Well,
most part.
right, and,
But
and the, the large wallets I was explaining was what we call whales. Those are your whales.
okay,
yeah,
right.
but if you only have a few people who own the majority of the float of a of an investment tool, you're not you're either not gonna have a lot of volatility, or you can swing the other way. You're subject to huge swings of volatility.
Hmm.
You know,
Well, that's what the
me
cryptos
personally,
suffer from is too much volatility.
exactly. And I was just about to say, me personally, that's a major, major red flag. If I don't see enough diversity and ownership of the float, I want to stay away, because you're telling me literally one or two people on a whim can send the price either up or down. That to me scares me.
But I think it's also that there is a large holdings of wallets, but either some people they've forgotten the wallet password or people have died. Like recently, I don't know if you guys talked about it, where there's a, a cryptocurrency exchange in Canada where the owner he died and no one else knows the password, and there's $193 million uh, of cold, as they call it, cold storage password. I mean, cryptocurrencies that now can't be accessed. Where now they have to gear up for a lot of lawsuits and liability. You know, so I think that might also be why there's so few people who own so much.
Yeah, but see, from what you guys are telling me, let me let me make a an analogy like this. If there are, say, 20 million people and they all own widgets, 20 million people, but yet you tell me that there are 100 people and they own 60% of the supply of widgets, that's not a good thing, because those 20 can totally negate the fact that there's 20 million people who own 40% of the float. If 60% of the float is in the hands of 10 people, even let's say it's more equitable. Let's say there's 20 million people and they own 60% of the float. But if 40% of the float is in the hands of 10 people, those 10 people still control what's going to happen to the price of those widgets. Because when you have that much control in such a small amount of hands, they have the ability to single-handedly completely determine what's going to happen with the price of that underlying security. And that, for me,
I
again,
think it's a
is a
yes
major,
or no.
major
I,
red
I
flag.
think it's both though, because one, those are for the bigger cryptocurrencies, and you know, uh, people are starting to move away from Bitcoin as kind of the arbiter of all cryptocurrencies
Okay.
in terms of exchanging. So I think it's changing along with stable coins starting to come up, backed by real fiat currencies, so people can exchange it relatively easier. And there's more and more cryptos will come out. So I don't know if they'll start becoming stocks to a certain extent, or they start becoming currencies that people can trade. So there's a lot of volume at the moment in terms of trading, but as the volumes increase and the different cryptos become even more diversified, and new ones come onto the market that are more viable than, or I shouldn't say viable, but I guess become more important than Bitcoin and Ethereum and some of the others. That kind of shifts, the focus from those ones to being where more people own more of it than just like 4 or 5 people owning 60%, if that makes sense.
Well, the reason why a lot of those wallets are actually by the whales are actually from the early years of Bitcoin. The pre 2015, pre 2012. So because many of those other cryptos are pegged to an exchange where Bitcoin is the intermediary, then that becomes your volatility point. So as long as those exchanges are set up in that fashion, then you're always going to have that issue of that massive volatility. It's not so much that the whales are holding on to it, but more about how the currency is actually traded through these exchanges. But now that you have more trusted solutions like Coinbase coming online, that's starting to change everything now, especially with some of the new mechanisms that were put in place the last few weeks about allowing people to buy cryptos with their Visa or their MasterCard. You imagine a person with a with a platinum card or a gold card or something to that effect that has $2,000, $4,000 in credit line, being able to just suck up cryptos on the fly.
And right, and as Dollar Will was mentioning earlier, some of the stable coins, if the exchanges move towards using those as the mediums instead of Bitcoin, then you don't have the problem of the extreme volatility that goes with Bitcoin.
Mm-hmm.
So that might kind of level off the buying power of the people with the former large holdings of Bitcoin.
Mm-hmm.
Yeah, I mean, I think when that's going to be key when we get more stable coins. That basically it's going to look like a complete currency market with cryptos right alongside fiat currency. Because what is a stable coin? One is going to be like the U.S. dollar. You're going to probably have another one for the euro, another one for the Swiss franc, the British pound. They're all going to be represented there. So it's just going to be a currency market, which includes the cryptos right alongside fiat currencies. And there'll be relationships, complex relationships between the fiat currencies and the cryptocurrencies. And so it'll be a good marketplace where you can find a lot of things to trade.
I'd like to throw a bit of a left curve into this discussion, if I might. Saudi Arabia, as I've spoken before here. Saudi Arabia, all the oil fields are owned by Aramco. Aramco is 50% owned by the Crown, 50% owned by whatever American investors were there when the company was formed. Some of which were, people who owned Standard Oil, who would be the descendants of John D. Rockefeller. The point I'm trying to make is Aramco does not publish well viability figures. A scientist in 99 or 2000 snuck out some papers that showed that the very first well that was ever found by Standard Oil in 31 or 32, that field is completely dry. And the second field, some of the wells are pumping in more water than oil is coming out. As a well begins to go dry, it loses pressure. So you have to pump water into the well to force it out. So when you're pumping more water in and oil comes out, that tells you that that well is going dry and that most of the wells in that second field are starting to run dry. So the point is, um, MBS, the current crown prince, is looking for ways to move the country away from dependence on the petrodollar. So could Bitcoin be one of those ways?
I, I believe that they were working on creating their own crypto, but I think they got a lot of backlash for that because when they tried to spin the IPO up for Aramco, it didn't go too well for them.
Mm.
So they're in a heap of trouble. They know it. They got about maybe 20 or 30 years left before they can actually make a transition out of that phase. So that Nemo project that they was talking about in Northwest Saudi Arabia um, is actually their their ace card, so to speak, or their trump card. But if MBS falls, that project falls too, because no one's going to be the visionary behind it.
Right, because
What's the Nemo project? I don't know if you guys talked about it before, but I first time hearing it.
Nemo is basically Saudi Arabia's Silicon Valley.
Is this the one where they're trying to do the Davos in the desert? Is that for that Nemo project?
I don't know if it's Davos in the desert, but I know it has a lot to do with automation, Silicon Valley, as well as foreign investment into that area. I believe the Chinese are one of the biggest investors in that area. So um,
that was what I was referring to. I think this was a couple of months ago when the journalist was killed. They were trying to get people from the U.S. government, investors from Silicon Valley, Wall Street, other countries.
mm-hmm.
Was that in regards to this Nemo project, or were they separate?
That might have been separate, but the Nemo project in itself is supposed to be, this grandiose idea of moving away from the oil and moving more into automation and blockchain and other emerging technologies. And MBS had this, this grand idea of moving millennials into this area to have their own Silicon Valley. But if MBS gets taken down, then that whole entire project goes to poof, and it's no longer worth anything. And then Saudi Arabia is really screwed because they will have no other tradable commodity that they can pull from. And in that instance, that's when they start invading Africa.
Right.
Or knocking down Syria.
One of the projects that building this what MBS sees as his Silicon Valley. Mm-hmm. He also wanted to build that a high speed rail, a light rail, several other major transportation projects. Mm-hmm. Because when the oil runs out, it is literally overnight the country's done, because the money that they have in the bank is only going to last but for so long. So the money will last for a long time, but the credit rating overnight goes to crap, because Saudi Arabia's power is 100% based on the fact that they are the world's largest producer of petroleum. So what happens when they no longer have that? So there, and see, the thing is this: we're all guessing. It could be 10 years, it could be 50 years, but clearly, the oil, they're on a time clock. Whether it's a time clock, whether it's borrowed time, they're on a time clock. And the fact that MBS is pushing this, and MBS is receiving a lot of pushback from his own, I don't want to say his camp, but from within, because a lot of the clerics, they are against the business dealings that MBS is doing, because a lot of the clerics and even a lot of the excuse me, even a lot of the businessmen who do business. They don't believe in a lot of the projects and the reforms that MBS is pushing because they're so stuck. And I'm just going to say it. They're so stuck in a religious model first that governs any and everything that they do as a nation. They're not looking to the point where what happens when we don't have this hammer to beat the rest of the world with.
Right. And you were gonna say something, Noah?
No, go ahead. I'll go after you.
No, I was just gonna say that in this regard, MBS would be wise to actually break the country apart and put it into some form of blockchain where it becomes an exchange traded fund where other outside investors could actually come in and prop up the value of the land itself, despite the fact that it's a desert. Allowing people to put money into it through an ETF would actually, especially on the blockchain, would actually make it more viable. In case when the oil does run out, because they really don't have any export outside of oil. They don't grow any crops. There's no agriculture. I mean, they could sell sand, for glass making and other things of that nature, but that can only go so far for them. They're really in a pickle right now, and that's why Yemen is so important, because Yemen has lots and lots of oil untapped. Gazprom actually discovered that there's oil sitting right in Yemen, right where the Houthis are, and that's where Saudi Arabia is bombing for that reason, to get them out of there so that they can actually get that oil, because there's untapped reserves there.
Wait a second, Mike. And listen, I don't mean to cut you off, but basically you're telling me Nigeria, now Yemen, and Brazil are all in the same boat, whereas the fact that they have unproducing reserves of a global scale.
Yemen has billions of dollars of oil sitting under there, and gas. There's gas under there as well.
Wow.
So if Yemen can actually, cause Gazprom, which is a Russian state company,
Right.
could actually get that energy from under their feet, then that puts Saudi Arabia out of business overnight. They are not going to tolerate that. That will collapse the whole entire kingdom.
Oh, of course.
And it will collapse the UAE as well. So they have a vested interest in this. And it's one of those things that Yemen could be, the next Dubai overnight.
Well, I'm gonna throw another little sideways monkey wrench into this current discussion. Germany is one of the top three most powerful economies in the world. We already know through Deutsche, Germany has a lot of exposure to China, but Germany gets 45% of their energy from Russia.
Mm-hmm.
No one's talking about that.
Mm-hmm.
A lot of exposure there.
Except for Trump, ironically.
Oh, I don't believe in any of that because I don't care who says what, who talks what. Until you show me some proof, it didn't happen. So I don't believe in any of it. To me, I just don't want to engage.
Right. I guess just to briefly go back to Saudi Arabia, the reforms and kind of stuff, I think you might be right on that, Paul. Um, they're too incompetent, their leadership, for anything like that to get done. Uh, and it's not necessarily even the religious aspect of it, because well, actually, there is a religious aspect, but not in the way you're thinking. If Saudi Arabia opens up to more, I guess you could call it liberalization, which their current leader is trying to do, it kind of puts them in a pickle in terms of, that's where the Holy Land is. So opening up to quote unquote, Westerners, it will cause a lot of people to buck at it. Like, for example, when the U.S., they didn't even really have a military base anywhere near, their capital or anything like that. It was on the coast, but even that, they had to push the U.S. out because of the kind of backlash they got from the Muslim world. So I think that's a part of it, and the other part of it is that their establishment, they've been drenched in oil money and its corruptions for so long that they literally can't see anything else, because they could have done a lot of these reforms 40, 50 years ago. Back in the 60s, 70s, 80s, they could have been, they had the money to you know educate their people, to build businesses. They could even buy technologies from anywhere in the world. They could get any scientists they wanted to, do research there. But they had a vested interest in keeping, especially their youth, somewhat educated but undereducated. Because Mike talked about it. They don't have, uh, an air force, so to speak. The U.S. does a lot of their bombing. They don't want to teach anyone to even pilot aircrafts because they're afraid it'll be used against them. So
Right,
that's the kind of quagmire they've put themselves in.
right. But see, when I say the religious aspect of it, the clerics have a lot. The clerics have a lot more power in Saudi Arabia than people realize. Even though the royal family rules, okay, it is tenuous because there is a coalition of a lot of great houses that prop up the Al Saud family, right? And a lot of that support also comes directly from the clerics. They have to keep the clerics happy. Even everything that MBS does as the crown prince, he has to always court the favor of the clerics. Okay, the clerics hold a tremendous amount of sway over not only the common people but also the business people and also the other great houses. Okay, with who make up the quote unquote royal court. So, so the religious aspect in that nature is immensely powerful when you look at the overall intricacies of what the royal family in Saudi Arabia, the Al Saud family, deals with. Okay, and those clerics, the Al Saud family from Ibn Saud and his brothers and his sons and his great grandson MBS, they've always had to fight, to court, to cajole, to try to nudge, to try to play and keep the clerics happy and to keep, because everything in Saudi Arabia at the end of the day, whether people realize it or not, it's a game of keeping the clerics happy. Because if the
Right.
clerics are not happy, they can upset everything. Even MBS as the crown prince. If all the clerics turn against him, it's game over for him. Okay, he may be the crown prince and he's the de facto king because his father is so sick right now. But
Hmm.
he's not an absolute ruler. He doesn't. He has the power on paper, but he really shares that power with the clerics, and that's something that a lot of people are unaware of. You have to really study the intricacies of the political nature in Saudi Arabia.
Right. And that's only for, one reason only. That's the legitimacy that the crown gets to, rule the country. Because right now they kind of keep the clerics keep the general populace, along with, the oil subsidies that their citizens get, from kind of rebelling against them, because they say, you know, we know the crown prince, and the royal family, they're corrupt, they do bad things, they're not great leaders, but you have a religious obligation not to rebel against your Muslim leaders. But in the event that they say that you have a religious obligation to rebel against them, then it's definitely over for them.
Right, and there are a lot of. I'm sorry. Let me be precise. Be precise. There is a vocal voice. There is a vocal voice amongst the great houses that goes back to the way when Ibn Saud uh, led his army and conquered the nation of Arabia and created Saudi Arabia. There's a lot of there's a lot of old hurts and a lot of sons who lost fathers in those conquests, and none of that has been forgotten. Money has not washed away all of that. And when you add to that, some of those some of those men are pious. Some are not, but some are. So everything in Saudi Arabia, you have to look at the clerics, you have to look at the religion, you have to look at the somewhat tenuous situation that the royal family has. Because there was one, it was Ibn Saud's, I want to say, Ibn Saud's, either his youngest brother or in fact, it was his youngest brother who was king in the late 60s, early 70s. He almost lost it. He almost lost the throne because he wasn't strong enough to keep the other houses in line. So Saudi Arabia, there's a lot going on there.
Yeah, and it doesn't help that tonight we covered Iran launching their go back coin, cryptocurrency coin. So
Mm.
that really puts really has the House of Saud biting their nails because Iran is coming and there's nothing you can do about it. Their their intellectual capacity is immense. You know, they have nuclear engineers and space scientists and things of that nature, aerospace engineers and stuff of that nature. Saudi Arabia doesn't have that at all. They don't have a intellectual class of people that can actually carry the country forward. And unfortunately, their time is very near. Probably in the next 10 years or so, if there is a war that breaks out in the Middle East, um, they're finished.
You know, it's funny. It's funny, Mike, that you talked about Iran because Ahmadinejad was Ahmadinejad was receiving praise amongst European leaders when they went to Iran after he said he would stop the country's uranium enrichment program to produce nuclear weapons. And he invited heads of state, scientists, and inspectors to Iran. And they were surprised at the level of technical prowess and achievement that Iran had in their nuclear enrichment program. They all said that um, Iran has the wherewithal to create viable nuclear weapons. They have everything that they need. They have the technology. They have, most importantly, the human capital. They were surprised. They said the only reason that they don't have them now is time, and that Ahmadinejad told them to stop.
Hmm.
So, so everything that you're saying, proven as fact years ago.
Hmm. Yeah, and the thing is, there's only so much you can do to suppress Iran at this point with their capabilities. I mean, the launching of a new digital exchange network, you know, for cryptos that's gold backed, you know, not oil backed, but gold backed. See, when Saudi Arabia was talking about, you know, creating their own crypto, it was going to be oil backed and backed by Aramco's oil. But now that's not going to be the case because your oil's running out and your crypto would crash almost overnight. It won't be worth anything. Um, so with Iran coming online with their gold backed crypto, that changes everything because Iran has a lot of gold to actually spare. I think they have something like 10 tons or something like that.
Yeah, and that's the one flaw in using oil to back your currency. Oil gets its value from selling it to be processed. Gold's value is inherent. That 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 never goes away.
Hmm.
Right. And I think the lesser, I guess, discussed asset of Iran, other than their immense human capital, is the countrywide discipline they've developed over what 40, 50, 60 years of sanctions from the world,
Hmm.
right? So as soon as they're able to get access, get out of the sanctions that they're in, they have a real ability to kind of burst onto the world stage.
Mm-hmm.
It's kind of like how Cuba, even as much as the U.S. sanctions them, they've developed the best medical practitioners in the world, despite the sanctions.
Right. Right, and medicine doesn't really change all that often enough for it to be impactful. So they can teach a nation of people the same exact thing, doing it throughout, and not really be affected.
Yeah, and I would not disagree. I would just counter to say that Iran has been on the world stage for years now. The American media does not cover that or admit that or show that. But if you travel outside of this country, both Iran and Cuba, they are on the world stage and they've been there for a very long time. Cuba, much more so, obviously, but Iran is not looked upon in the same negative light outside of the U.S. as it is inside the U.S. Because everything you see on mainstream media in this country is filtered. Everything. If you're going to look at media in this country, it behooves you to look at alternative media because mainstream media is just one giant filtered lens that you're looking through.
Hmm. All right, I think we'll stop here and actually call it a night. Thank you all for joining us, and also I just want to make one announcement. I am offering free one-on-one mentoring for people getting into IT or already in IT. So if you want to have some mentorship, I'm offering it. You can either put your email in the chat or email the Brain Trust or leave us a message underneath the video, and I will actually get back to you. So again, thank you all for joining us, and have a good night.